Let's take a look at futures right now. Bit of a mixed picture as we head into the open of the trade here. FTSE futures are up a little bit with a little bit of pound weakness. DAX futures are down a little, just about 0.2% right now. This after European stocks were mixed yesterday. U.S. stocks then fell on the Facebook story and on a little bit of pessimism surrounding the possibility of stimulus, and that risk-off sentiment has pretty much rolled around the world. Now we're seeing gains, though, as the live trade opens. You can see on this global macro mover screen in the left-hand column, equity indexes populate as they open up. The FTSE up more than 1/3% at the start of trading. The IBEX gaining about 0.1%. And futures otherwise were pointing lower on the continent. You can see the DAX now opening little changed, but with a plus arrow there. The CAC 40 open almost 0.25% up, and the FTSE continues to climb. So European markets are starting out a little bit risk on this morning as the ECB is poised to deliver another blast of monetary stimulus later today. Policymakers expected to add another 500 billion euros to their emergency bond buying program and also extend that program until at least the end of 2021. Joining us now is Hugh Gimbert, JP Morgan Asset Management Global Market Strategist. Hugh, what do you think, first of all, or what do you expect from the ECB? I guess there were so many things up in the air. Now we know not to worry about Brexit until Sunday. Now we know we don't have to worry about the EU budget any longer. I guess the ECB is the main focus on this Thursday.
I think that's right. And they've been quite clear in being willing to guide the market towards more stimulus today. So personally, I'd expect the focus primarily to be on an extension of the PEP program. So looking at somewhere around a 500 billion euro extension to that program. I also think that the timeline that they're willing to extend that over is going to be probably more significant. Because for me, when you look at the way markets are behaving, it's less about the pace of purchases on a weekly or a monthly basis. It's about the knowledge that the ECB stands as a backstop for markets such as European credit and also peripheral sovereign bonds. So looking at whether they extend out to the end of 2021 or even into 2022, I think is going to be the key focus for the market. Clearly, when the ECB are willing to talk up prospects of stimulus well ahead of this meeting, it always creates some risk for a bit of indigestion on the day, but I see no reason for them not to follow through on the statements they've been making over the past few weeks.
Hugh, good morning to you. Yes, so Christine Lagarde, the president, certainly making the point that is the duration of support that is also important, as well as the size. She certainly made that point in the past. How do you expect banks to continue to support business through 2021? Sticking with the Eurozone story, how can the ECB make sure that the generosity they're giving to banks is being passed on to those who need it, assuming that that is the right way to keep the Eurozone economy ticking over through 2021 and recovering in 2021?
Yeah, I think that's a good point. And whenever you're looking at ECB stimulus measures, I always think including that sort of banking channel is really important, given the way that the Eurozone economy relies much more heavily, I should say, on banks to be passing through liquidity to get it into the real economy. So I think it's possible as well that you would see the ECB looking at further TLTRO programs to come in 2021. But for me, it's less a problem here about banks' willingness to lend and banks' ability to lend. It's more about simply demand for those loans. I think it's got to come from the corporate sector, really, and there's only so much that the ECB can do to encourage that capital to start to flow.
What should investors be prepared for, Hugh? I mean, we're looking at, I think I saw 57 basis points on BTPs earlier, negative yield in Portugal, where they have 120% debt to GDP. Italy's 160 debt to GDP. And we're expecting to see, a wave of bankruptcies and defaults unlike anything in recent memory next year. How do investors deal with this kind of situation?
Yeah, so for me, it's all about the supply and demand dynamics in European sovereign markets for next year. So the ECB, assuming that they do extend their purchase programs today, are just massively warping the supply and demand dynamics in favor of bondholders. So the Portuguese government bond market is the prime example of that, where this is all about technicals, all about liquidity, and much less about the fundamentals of the Portuguese economy. So I think looking forward, those sort of peripheral sovereign bond plays still have decent, a decent outlook for next year. I think you are starting to have to pick through across the periphery to try and squeeze out what is, limited amounts of remaining value. But basically, you know that on a 12-month time horizon, the ECB stand ready to backstop those markets. And so I still think that looking outside of core government bond markets into the periphery is an area where investors are going to keep going to just simply hunt for yield. This is the same old story that we've been talking about over the past few years. When you look at what's on offer in markets such as Germany, it's really no surprise that investors are willing to extend marginally out the risk spectrum given the strength of the ECB support.
And what about the strength of the ECB's pushback on a stronger euro, Hugh? What level of the euro really matters to the ECB? We're at, where are we, 120.88 right now. Is 120 a real area of concern because of what it does to inflation expectations in the future, or is it higher than that?
I mean, for me, it's all about what's driving the euro higher. And so an environment where the euro is appreciating because, frankly, the European growth outlook is starting to improve is not a massive problem, in my view, for the ECB. Clearly, it's not helpful for them achieving their forward-looking inflation target, but neither is it the only thing standing in their way. So if the ECB felt today that really the euro was the main problem, then I think you could see them thinking about changing the way that they would view their next steps, maybe looking more at interest rates rather than focusing on asset purchases. But there are so many other factors also sitting on European inflation today that really I think that the story for this meeting is going to be about more of the same, focusing on keeping financial conditions very easy, markets very calm and liquidity flowing through the system, and really leaving that inflation target for another day because they're simply too far away at this point to be able to make a big enough step change in policy to really put that inflation target back on track anytime soon.
Sure, especially if they're importing disinflation with a strong currency. Hugh Gimber, JP Morgan Asset Management, global market strategist. You're going to stay with us. We get more from Hugh on the other side of this break. In terms of Brexit, no deal, but a new deadline. Brexit talks will continue until Sunday. Well, that's the new deadline, but you could see that moved as well, obviously. Big differences remain. No progress has been made. This is Bloomberg.
I truly hope that an agreement can be found, because even with an agreement, it's going to be very painful and difficult. But with a hard Brexit, it's going to be really painful, especially if people losing their jobs is the last thing we need right now.
If we leave on a no-deal basis, there will be tariffs, and those tariffs can be quite substantial on some food items. So those almost inevitably are going to lead to higher prices.
The most important is that the market participants, banks, asset managers, all participants in the market are well prepared for this event. And hence, I do not anticipate huge volatility around it.
That was just a selection of some of our guests talking about the possibility of a no-deal Brexit. Now, Boris Johnson's dinner with Ursula von der Leyen, aimed at breaking the Brexit trade deadlock, has ended without agreement. The European Commission president says the two sides are still far apart. Number 10 says that large gaps remain. A new deadline to reach a deal has been set for Sunday. Hugh Gimber, JP Morgan Asset Management's global market strategist, is still with us. And Hugh, most guests we talk to, base case is still that a deal gets done, and it seems from the currency strategists we've talked to, the pound is still trading with that view, even if it is down by 0.7% this morning. Have you had to update your base case recently?
I wouldn't say so, I'm afraid. I mean, I think markets are almost caught in the same position as the negotiators, because the problem for these negotiations over the past few months has been that there is no final hour to force compromise. We've not got that at any point over the summer, and these negotiations have just been dragged out and out. And I think you're seeing the market moves today reflecting that investors still don't fully believe that even this new Sunday deadline is the final cutoff for talks. And so, yes, the pound is down slightly this morning, but it's by no means pricing a genuine probability of a no-deal outcome, which we would see as putting much greater pressure to the downside for the pound. So if anything, I think there is some skepticism about really seeing this weekend as the final hour. I think this could be dragging later into December. And really at any point over the past few years, when negotiations on both sides have had the option to kick the can down the road, that's the option that they've taken. And yes, it's not as obvious how they do that this time, but I still think in the shape of a deal, you could end up seeing a deal that is classed as a deal, but actually looking a bit more like another extension to the transition period.
Yeah, I was going to ask that exactly, Hugh. I mean, do you get a deal that's almost, is it possible to get a deal that's almost as bad as a no deal anyway? Certainly from the UK's perspective, it seems they're caught between a rock and a hard place, with the EU wanting to make the rules and then also be the referee.
So for me, what is still very important here is the ongoing relationship between the two sides. And so if you do see negotiations break down in December, then I think that would set up for a much less amicable relationship come January. Because regardless of the shape of any deal that's agreed or not, there's still a lot of work that's going to be needed to be done over the coming months to try and really start to flesh out exactly how this future trading relationship is going to work. And so, yes, to your point, Matt, as the time has shrunk, so has the scope of the deal left on the table. But for me, it's about that ongoing relationship and simply sort of how willing and how trustworthy both sides view each other in working together post January the 1st to ensure that that trading relationship is still working very smoothly. So I still think it is absolutely significant that negotiators push towards a deal over the coming week or two.
Yeah, so that's interesting, Hugh. So obviously the economics of the deal itself matter, but also the tone that it would create. And is that why it matters? Because the UK economy is largely a services economy, of course. The deal we're talking about here is all about goods. It's not about services. And so this matters maybe because it could lead on to further work, further cooperation on services, or would that be too much to hope for?
No, I think there's scope for that to happen in the future. But the problem for now is that, first of all, you've had this big hit from COVID, which has really been a service sector hit. But then you look at the potential implications of the UK leaving without a trade deal, and that's all about manufacturing. So really, you'd be hitting the part of the UK economy that has been holding up much better so far this year. Similarly, when you look at the timeframes that these things would play out over, COVID has been a short and sharp hit to the UK economy, whereas really the effects of a no trade deal exit, I think, would play out over a much longer time period. So you marry those two things together and you end up with something which is extremely disruptive for very large parts of the UK economy. And I think that will be in the back of politicians' minds over the next few days as well.
How does the rest of the EU look to you, Hugh? I mean, Bloomberg News reports that we're going to get a deal on the budget, 2.2 trillion for the next 7 years, and the recovery package. Are there any lingering concerns about the EU for you with Poland and Hungary?
No, I think what we've had over the past 48 hours or so has been excellent news. So we saw the reaction in peripheral bond markets back in the summer when this deal was first struck, that really the political will that went into getting this agreement forced investors to sort of just end those conversations about COVID being the issue that was going to drag the European Union apart. And so clearly over the past few weeks, it's been a bumpy ride to get that over the line, but it now looks quite clear that there is a deal to be struck and that the recovery fund can come into play in 2021. And that, I think, is really important when you look at how the fiscal impulse in the European Union compares to other parts of the world. It looks like that fiscal support driven by the recovery fund can stay in place within continental Europe for much longer than other parts of the world, such as the US, for example. And so I think this is a really significant step forward. And now it's really about getting those recovery funds out and accelerating the distribution of those so that countries can really keep government support in place as we move into next year.
Thanks very much, Hugh. Thanks for giving us your time. Hugh Gimper, JP Morgan Asset Management Global Market Strategist. Hugh will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. And Matt, just as we're talking all things Brexit, just worth pointing out a couple of lines from Dominic Raab, the UK Foreign Secretary, saying the EU will have to move significantly, that's a quote, for a trade deal. We also have lines from the EU Commissioner McGuinness, Financial Services Commissioner, saying a glimmer of hope from the Brexit dinner. That's what she sees. So that is in itself perhaps interesting. And just like we've been saying, had never expected, she said she'd never expected a breakthrough over the dinner itself. Matt?
Hopefully, I mean, you'd assume that she sees hope, right? Because if there isn't any, then there's no need for a financial services commissioner anymore in the UK. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Taiwan's Global Wafers has agreed to buy German silicon wafer manufacturer Siltronic. The deal, worth $4.5 billion, is yet another in a record year for the industry. It represents a 10% premium to Siltronic's closing price on November 27th, when talks were disclosed. Home rental platform Airbnb has priced its long-awaited IPO above the marketed range, giving it a value of $47 billion. The firm is seizing on investor demand as its business roars back from the pandemic slump. The listing adds to an already...
Morning, everybody, guys. I'm going to place in order to sell short euro. Price I'm looking 120.93. Okay. Let's see.
Leaders are set to back a landmark stimulus package after Hungary and Poland dropped their veto, or at least a compromise has been found by Germany with the East. We'll get the latest live from Brussels next. This is Bloomberg.
Well, we've got to be doing a lot of community engagement and community outreach to get people to understand the two things that bother people. They say, well, maybe we did this too quickly. They need to understand the speed is really a reflection of the extraordinary scientific advances that have been made that allowed us to do things in weeks to months that normally would have taken several years. That was not compromising safety, nor was it compromising scientific integrity. The process that went into deciding the safety and efficacy was both independent and transparent. We need to make sure people understand that.
Anthony Fauci speaking there at the 3rd annual Bloomberg Health Summit with Caddy K. He was discussing the importance of convincing Americans COVID vaccines are safe. EU leaders are set to approve a landmark stimulus package after Germany brokered a compromise with Hungary and Poland to lift their veto over the deal. The agreement paves the way for a flow of $2.2 trillion to the continent's battered economies. For more, Bloomberg's Maria Tadeo joins us out of Brussels. So for once, we're going to talk to you about something other than Brexit, Maria. Tell us about Orban sort of backing down. Yes. Well, I mean, almost, you know, it's a big deal here. $2.2 trillion, the future of the European Union, the future of the global climate. I mean, it's huge.
Matt, it's huge when you look at the amount of money. It's huge, of course, for the European Union, and it's particularly huge for countries like Italy and Spain because they are depending on the recovery fund. They need that flow of money, and this would guarantee, in principle, that the recovery fund would be operational by 2021. Now, on the table, we know there's a compromise that's been cut by Poland, Hungary, and the Germans. The reason why the Germans have been all over this, it's very simple. First of all, they hold the rotating presidency of the European Union, but also this is very much seen as an internal affair. Angela Merkel and Viktor Orban, funnily enough, do sit in the same political family here in the European Parliament. Now, based on what we understand will be in this agreement, you could say it's a very elegant climb down that Viktor Orban has been offered by the Germans. He would, to some extent, be able to say he's been able to separate the funding from the politics, but ultimately the wording on that document over rule of law, and that is the connection between the money and the executive aid of a government would stay the same and very much enforced by the institutions. So you could argue, as I say, it's a climb down for Orban, but it's been done in a way that he can take it. And the question now becomes, will it be good enough for the more progressive democracies here in Europe? Is Mark Rutte going to take...
Okay, new position open, short position on euro against dollar at 120.90.
In part, we know that Ursula von der Leyen, after her dinner last night, she is going to brief leaders in a few hours. Maybe she's briefing them on other things as well. But we know that she'll be briefing them, talking to them about what happened at that dinner. What do we expect?
Yes, Anna, and that briefing will be key. That's what I'm being told. It really is about her perception from that dinner that lasted almost 3 hours yesterday. They said it was interesting, it was lively, but it really will be the perception coming from the Commission and the head of the European Commission, whether or not she now believes the Prime Minister is serious about a deal and can get to a compromise. So that briefing will be key. And we also understand that that is very much the only contact that European capitals will have with Boris Johnson. This will be kept in-house. It really will be the Commission that will lead the talks until Sunday now. But of course, it will be interesting. Brexit not officially on the agenda, but European leaders will talk about it. It'll be interesting to see what we hear from now until tomorrow coming out of that meeting that is starting in a few hours here in Brussels.
Okay, Maria, thanks very much. Bloomberg's Maria Tadeo joining us there from Brussels. European equity markets then fairly flat overall, but that hides a big divergence. We've got FTSE 100 moving up by 0.4%, something much flatter on the DAX. The pound, as is often the case, seems to be the differing factor there. So European markets making some very, very modest gains this morning. Up next, we'll talk about tech. It's been something of a theme hanging over markets in the last 24 hours. That's next. This is Bloomberg.
Welcome back to the European Open. We are 30 minutes into the trading day. Let's go ahead and take a look at what's going on in terms of stocks, the direction, and the individual movers in terms of the industry groups. Here you can see the stocks 600 is very little changed, and it's been up and down between gains and losses all morning long, well, all 29 minutes of it. Take a look at the GRR page, and you can see which industry groups have been moving higher and which have been moving lower. Energy is doing particularly well today, as well as FB&T. Anna, what is FB&T?
Food and beverage.
Food, beverage, and tobacco. I'm going to guess food, beverage, and tobacco. They've recently changed these groups. So smoking, drinking, and eating. Three things that people will probably never quit doing, also doing well today. So that's a fairly defensive one. Technology is doing poorly, and that's on the back of the Facebook story that we're going to talk about briefly. Let's get the first word news right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Brexit negotiators have until Sunday to come up with a deal. That's after a dinner between Prime Minister Boris Johnson and European Commission President Ursula von der Leyen ended without a breakthrough. The two sides will continue talking, despite major differences still remaining over fishing rights, competition rules, and the enforcement of a deal. US lawmakers are working on a compromise pandemic relief plan, but they've yet to resolve the deadlock over business liability and aid to state and local governments. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are still optimistic a deal can be reached. Pfizer says some vaccine documents it sent to Europe's drug regulator have been accessed in a cyber attack. It's the latest attempt to steal research on coronavirus. The European Medicines Agency is launching an investigation alongside law enforcement. The hack is not expected to have any effect on the timing of the vaccine review. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much, Laura. Laura writes here in London. Now, Facebook has been sued by US antitrust officials and a coalition of states. They're accusing the company of trying to illegally crush competition through its acquisition of Instagram and WhatsApp. It's the biggest regulatory attack against the social media giant in its history. For more, Matthew Bloxham, media and tech analyst for Bloomberg Intelligence, joins us. That's the context then. That is the size and scope of this. This is potentially, I suppose, Matt, pretty huge. What are regulators going after here?
Yeah, hi, Anna. Yeah, I mean, that's pretty huge. I think the issue with the regulations is that there are lots of different regulators, not the US, Europe too, and they're looking for lots of different things, and sometimes those things they're looking for are quite contradictory. You know, I guess at the pure level, the antitrust authorities are looking to create enough oxygen in the internet market for new upstarts to come along and be able to grow and challenge people like Facebook in the future and give customers more choice and new innovation. But I think obviously that, you know, we've had a lot in the last few months about censorship, about policing content on the internet. And so I think, you know, some regulators, some policymakers are looking to people like Facebook to do a much better job of being essentially a policeman for the internet and content that's on there. But, you know, we've heard before that the Republicans, you know, feel that some of these internet giants censor right-wing views, but on the other hand, you know, there's a lot of kind of issues around child protection there too. So it's quite a kind of messy and complicated path that Facebook and others are trying to navigate at the moment.
How likely is it, Matt, that Facebook would actually be broken up, and what would that look like?
Yeah, I think the risk is definitely there. I personally think that it's ultimately quite low, and maybe they'll get away with some kind of, you know, fairly hefty fine. But, you know, it's definitely possible. I mean, you know, I think if they were to be broken up, then essentially they would be asked to divest Instagram and or WhatsApp. I think from a financial perspective, divesting Instagram would be the biggest financial issue for them because it's probably about a third of their revenue and delivering most of their revenue growth at the moment. WhatsApp doesn't really generate anything for them at the moment, but they have big future plans for it to generate revenue. And they've been spending the last year or two actually, bringing all those different platforms much more tightly together and getting to share a common technology platform. So I think the longer this kind of process goes on, the harder it gets from a kind of technical perspective for them to unweave these different applications.
Yeah, for some time then, Matt, we've been talking about how other big tech firms, well, how various big technology businesses should be a little bit nervous about regulation. Does this have any read across into other big technology companies? Should they be worried about being targeted?
I think they should for sure, and I think they're already expecting it. To be honest, we see Google's already been put in the sights of the antitrust authorities, but we still have Amazon and Apple, which are probably sitting there waiting for their own lawsuit to appear with their own specific gripes against them. But the antitrust side of things is just one part of the process. Obviously, we had those big congressional hearings earlier in the year, which are looking at the kind of broader issues around how you regulate this industry and the big players in them. So as well as having to fend off gripes about potential alleged sins of the past, they're also going to have to be working on the kind of forward-looking policy issue and how new legislation might be crafted, not just in the US, but in Europe and other major parts of the world, how that's going to look and how that's going to influence their businesses going forward. So, I imagine, they've all been beefing up their policy departments for quite some time, and I imagine they'll be putting more and more money into those departments going forward because they're having to fight battles on at least 2 or 3 different fronts.
All right, Matt, thanks very much for joining us. Matthew Bloxham there from Bloomberg Intelligence. He covers tech and social media for us there. Now, SoftBank shares surged as its paper profit from the initial public offering of DoorDash hit $11.2 billion. DoorDash shares closed up 86% on the first day of trading, giving the food delivery company a market cap of $60 billion.
One half of our goal is building the largest local commerce marketplace in which we're bringing everything inside your city to you in minutes, not hours or in days. And the other part of our goal is to make sure that we can take the products we've built for our marketplace and give them to merchants in the form of ordering as a service, logistics as a service, so that they can build an end-to-end technology solution.
For more, Bloomberg's Danny Berger joins us. We've been talking a lot, Danny, about IPOs. Will we see Airbnb follow DoorDash when it comes to this kind of pop?
Matt, in a word, yes. It's extremely likely. The trends are all in Airbnb's favor. Of the 21 IPOs, tech IPOs we've seen come to market that priced above their range, 20 of them have seen this big pop on their first day of trading. There's a lot of interest in Airbnb. We know this because it's pricing at $68. That's above the range. So clearly some oversubscription there, a lot of attention and desire to get this IPO. But also what we're seeing with the IPOs this year is sort of this environment where, one, you have a lot of retail traders who want to get into the IPOs. We know Robinhood has been really huge and important in moving markets. And then at the same time, the float tends to be pretty low for these tech IPOs. It was an effect we saw with the Snowflake IPO, for example, where a lot of institutions just didn't want to sell. So the supply-demand dynamics are in favor of shares moving higher. I should point out it wasn't just DoorDash that surged with their debut yesterday. C3 AI, a tech IPO, also surged 120% yesterday.
Yeah, really interesting that the Airbnb follows in that path. If it does then, Danny, because, why is now a time that we're all of a sudden seeing these tech IPOs come to market? There's a lot of really interesting dynamics. Just thinking about Airbnb, yes, it's tech, but it's also hospitality. Hospitality hasn't been doing well. It's not a hotel business, though. It's a very different kind of hospitality business. And in broader hospitality, we are seeing those recovery plays. So there's a lot of different sort of crisscross dynamics when it comes to Airbnb.
Yeah, it's almost like the the perfect sort of scenario for Airbnb to come to. Because one, if you're treating Airbnb like a tech IPO, it's a really good time for it, which is why we're seeing all these tech IPOs, in that just growthy sort of names tend to do better during economic downturns. That certainly applies to growth IPOs when there are lots of demand there. And then as you say, Anna, Airbnb is a bit of a play on hospitality as well. And if you think it's going to come back, Airbnb, that is certainly a play you can make there. So the environment is ripe. The question will be this $47 billion valuation we're expecting when it lists, can that hold up? What happens to these tech stocks when the economy normalizes? Not just Airbnb, but something like DoorDash. Is that still going to do well when people are mostly going out to eat again and not ordering food in? Look, it really has yet to be seen whether these valuations are justified, especially for these companies which are still not really able to turn annual profits, but still the interest is there. People happily buying these IPOs when they list. Matt, Anna.
Danny, thanks very much. Danny Berger with the latest on these IPOs stateside. 40 minutes into your trading session, we'll get back to the subject of Brexit next. No deal, but a new deadline. Sunday is now the deadline. Brexit talks will continue until then. As big differences remain, this is Bloomberg. Welcome back to the European market open. 43 minutes into a trading session that looks increasingly positive. The DAX fairly flat, but elsewhere we see some modest gains for European equity markets, despite concerns around tech sell-offs that have been dominating the global markets over the last 24 hours. Nasdaq futures do still point modestly to the downside. Back to the UK story. Boris Johnson's dinner with Ursula von der Leyen aimed at breaking the Brexit trade deadlock. It has ended, of course, without an agreement. We know that, and we didn't really expect an agreement in any complete sense. They are still going to be talking. A new deadline has now been set to reach some kind of deal by Sunday. Joining us now is Matthew Goodwin, University of Kent Professor of Politics and International Relations. Professor Goodwin, really good to speak to you. I wonder, what the domestic considerations are that international viewers need to be aware of here. So what are the dynamics, the balancing factors that Prime Minister Johnson has in his mind as he is working out how much ground to give or not in these talks?
Well, firstly, is the fact that this weekend Boris Johnson is celebrating the one-year anniversary of his election victory, the largest majority since Margaret Thatcher's final victory in 1987. And that was entirely based on this promise that he would deliver a meaningful break from the European Union. Secondly, his whole electorate has been realigned around working class voters, pro-Brexit voters, social conservatives who want to see meaningful change in that relationship with Europe. And thirdly, these existential differences that run through this negotiation. This is not transactional politics. This is about philosophy. And Brexiteers are arguing, what is the point of voting for Brexit, passing the withdrawal agreement, and then signing up to something that does not give the UK clear divergence from the single market? And those philosophical differences are very real and long-standing.
I wonder, you know, I was talking recently to a fairly conservative British old boy, and he basically said he doesn't buy the idea that the EU would really offer a level playing field, and he points to the amount of state aid that Germany is prepared to give its companies like Lufthansa, and he says it would be unthinkable for Boris Johnson to go into an agreement where the EU gets to make the rules on competition and, you know, be the referee. Does that make sense?
Well, that makes complete sense. If you put yourself into the shoes of an average conservative Eurosceptic, the first thing you have to keep in mind is that you've been shaped by more than half a century of our Eurosceptic tradition. We are with Europe, but not of Europe, said Winston Churchill. And ever since the 1950s onwards, Britain has been the awkward partner of Europe. Now, why? Because Britain assumed it was joining an economic trading relationship, not a political, social, or necessarily legal relationship. And that's why I think the Brits have always stood well apart from the European Union. And of course, Johnson himself, having written for the Telegraph, having edited The Spectator, I mean, he is right in the center of that tradition that argues that, well, ultimately what this is really about is a long national tradition of judicial independence, of limited government, and of having accountable and transparent institutions at the heart of our democracy. So I think for those who are saying Johnson will inevitably blink and sign a deal, I think actually we should urge some caution. We need to remember where this school of Euroscepticism is coming from, and it's very committed.
What would the impact be of no deal then, Matthew? And I'm not thinking about the economics here. We talk about that often. I'm thinking about the relationship that would remain in its place. Would that reduce your expectations of further deals in the future, of geopolitical cooperation on all kinds of other matters, if we don't see some sort of deal come to here?
If we end up with a no-deal scenario, which I think, you know, we still have a long way to go until the end of the month, and I don't think, by the way, that this deadline of this Sunday is as meaningful as some.
Okay, I'm placing a stop on profit for euro at 120.91. Okay.
With a pinch of salt, but they suggest that over the long run, over 15 years, the impact of a no-deal Brexit on the UK economy could be greater than the impact of coronavirus. But we also need to balance that with the simple fact that a lot of the folks who ended up voting for Brexit in the first place weren't doing it for economic reasons. They were doing it for...
Position closed at 120.91. We have £200 in profit.
Is a parallel strategy of trying to really sign up as many agreements elsewhere in the world to try and kickstart what Johnson calls his global Britain vision, which essentially is what 2021 will all be about, which is redefining, repositioning Britain in the wider world and being less reliant on that trading relationship with the European Union.
Professor, is the only way a deal is the only way to make a deal? Boris Johnson blinking. I mean, it seems the EU wants to make sure the UK is willing to compromise, but the EU isn't willing to compromise at all. Is that the case?
Well, both sides have different incentives, and my argument would be that the entire internal logic of this negotiation was really always going to bring us to this gridlock, because from the perspective of the European Union, which is entirely understandable, they don't want to compromise or violate the single market area. And from the perspective of the UK, they're saying, well, why on earth did we vote for Brexit if we can't have any meaningful divergence around fishing, around business competition rules, or even how a deal will be policed? So both of those schools of thought are taking these two sides really to the extremes of those positions. They're interpreting what could happen, what might be theoretically possible, and of course they're not, as a consequence, willing to back down. And this is against a backdrop, let's remember, of more than 3 years of acrimonious and quite hostile talks anyway, alongside the fact, we often forget this, but for the European Union, this is the first time in its entire history that a major power has voluntarily opted to leave the European Union. So the psychology of all of this too, I think, is adding a complex layer. I do think, by the way, though, let's just pause. We've got a long way to go. I don't think the deadline this Sunday is quite as permanent and fixed as some are suggesting. I think talks could carry on all the way into the Christmas period and then be ratified during the holidays. So watch this space.
Thanks very much, Matthew. Really good to speak to you. Professor Matthew Goodwin, University of Kent, Professor of Politics and International Relations. Up next, what does the lawsuit against Facebook mean for the risk rally? We talked about this with Mark Cupmore a little bit earlier on. Let's see what Laura Cooper thinks about this subject. Tech and the regulatory maneuverings against big tech companies is something that we have been thinking a lot about on Bloomberg. We'll continue to do that with Laura Cooper from the Markets Live team. Next, this is Bloomberg.
Welcome back to the European Open. We are 54 minutes into the session right now, looking at slight gains on the European equity indexes, with the FTSE The CAC and the IBEX up about 1/3 of 1%. The DAX very little changed right now. Joining us is Laura Cooper, Bloomberg's MLive macro strategist. And today on the blog, they're asking the question, what does the Facebook suit mean to the risk rally? What kind of feedback are you getting? What are you hearing, Laura?
Well, good morning. I certainly don't think that kind of this news is flashing a sell signal across indexes. I think it's still really a company-specific story, but it does come at a time when kind of the tech sector was already ripe for a leg lower. So just looking at the NASDAQ, I mean, it did have 10 consecutive days of gains. We had overbought signals for the first time since September before yesterday, and this is up against frothy valuation. So the New York FANG index is up about 90% this year compared to about 14% for the S&P 500. So there was some catalyst needed to kind of take this a leg lower, but ultimately I don't think it's a story, for broader risk sentiment for now. It might be over the longer term if we do see kind of policy makers kind of put more pressure on tech. But I think for now, it's really kind of going to be more of a story of kind of stimulus and markets looking for a catalyst against kind of virus fears and vaccine hopes for now.
Laura, are you bracing for much to come out of the ECB meeting? Of course, we are expecting some fairly big policy announcements from the ECB, but is this going to be market-moving stuff or pretty much baked in?
Well, I think certainly, the ECB has well telegraphed that there is going to be some kind of action today. It's really whether kind of the low bar for disappointment can actually kind of feed through into kind of a market reaction. So markets are expecting that we're going to see a boost in pandemic purchases of $500 billion. We're likely to see kind of a duration extension through the end of 2021. But there are some expectations out there that we could actually see purchases kicked further through 2022. And if that case, we would expect to see an even bigger bounce. But given the fact of just looking at the bond market in Europe, the fact that we are seeing kind of this growing buildup of negative yields does suggest that there is a lot of optimism already priced in. So the bar really is low for disappointment.
Thanks very much, Laura. Laura Cooper from our Markets Live team at Bloomberg Macro Strategist. Thank you so much for joining us. That is it for the European Market Open. Matt and I are off to radio. Surveillance is up next on Bloomberg TV. This is Bloomberg.
A Brexit deal wasn't on the menu. The dinner between Boris Johnson and Ursula von der Leyen ends without a breakthrough. The UK and the EU set a new deadline on Sunday. The US versus Facebook. Officials call for a breakup of Mark Zuckerberg's empire, arguing his Instagram and WhatsApp acquisitions were intended to harm competition. And deaths in the US from the pandemic top 3,000 a day for the first time. In Europe, Germany admits it's failed to contain the spread of the virus. Well, good morning, everyone. Happy Thursday and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. So first thing is first, a check on the markets. The focus is on a possible stimulus in the U.S. The focus is very much also on what we're seeing with virus cases around the world. Then I look at Brexit and we're seeing a bit of movement on pound. Yet again, it's been quite a volatile week for pound. You can see euro sterling 120.94. And then I also wanted to, actually, it's not euro sterling. So we have cable 133.06. And then you see euro dollar 120.90. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Brexit negotiators have until Sunday to come up with a deal. That's after a dinner between Prime Minister Boris Johnson and European Commission President Ursula von der Leyen ended without a breakthrough. The two sides will continue talking despite major differences still remaining over fishing rights, competition rules, and the enforcement of a deal. Now, U.S. lawmakers are working on a compromise pandemic relief plan, but they have yet to resolve the deadlock over business liability and aid to state and local governments. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are still optimistic a deal can indeed be reached. The European Central Bank is poised to deliver another blast of monetary stimulus later today. Policymakers are expected to add 500 billion euros to their emergency bond buying program and extend it until at least the end of 2021. It comes alongside a 1.8 trillion euro spending package that EU leaders also hope to finalize later today. And Pfizer says some vaccine documents it sent to Europe's drug regulator have been accessed in a cyber hack. It is the latest attempt to steal research on the coronavirus. The European Medicines Agency is launching an investigation alongside law enforcement. The hack isn't expected to have any effect on the timing of the vaccine review. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Facebook has been sued by U.S. antitrust officials and a coalition of states. They're accusing the company of trying to illegally crush competition through its acquisition of Instagram and WhatsApp. It's the biggest regulatory attack against the social media giant in its history. Now, for more on all of this, Matthew Bloxham, media and tech analyst at Bloomberg Intelligence, joins us. Matt, what exactly are the regulators after, and does this have teeth?
Yeah, hi, Francine. I think one of the issues here is that there are lots of different regulators, and they're all looking for lots of different things from Facebook and the rest of the big tech firms. Obviously, at this kind of purest level, the antitrust authorities in the US, I guess, are looking to create oxygen in the market for the next wave of new entrants to come and challenge the strong position of Facebook and Amazon and Google in the marketplace, and that if they don't do something, then there just really isn't enough opportunity for those new companies to come through. But there's obviously a lot of other issues going on here too. We've seen news today that the European Commission is pushing forward with a new regulation that would look to the big internet giants to more effectively police content on the internet, and so that's kind of a different aspect here. So there's quite a lot of different kind of policy issues going on that are going to kind of materialize in different ways, I think, over the next year or so.
How likely, Matthew, is it that Facebook will actually be broken up then?
It's hard to say. I mean, I think it's clearly a real risk. My personal view would be that it's unlikely to come to that. But I think definitely Mark Zuckerberg's going to be concerned about this kind of formal request to break them up, and they'll have to work very hard. I think the kind of the bar for kind of providing enough evidence to force a breakup is probably too high, but we'll have to see. But maybe more likely there'll be some kind of multi-billion-dollar fine, I imagine, and some kind of constraints on the way that they behave in future, particularly in terms of mergers and acquisitions.
Thank you so much. Matthew Bloxham there, a Bloomberg intelligence analyst. Now, coming up, another day, another delay, a high-level fish dinner in Brussels. I'm, all over the fish puns and jokes. It fails to make progress with two sides still far apart. The latest on the Brexit sticking points. That's up next, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, another day, another delay. Prime Minister Boris Johnson and Commission President Ursula von der Leyen dined on turbot and scallops last night, but when it came to Brexit, they were unable to reach an agreement. Negotiators now have until Sunday to come up with a deal. Both leaders agreed that talks should continue in the next few days, despite major differences remaining. Now, for more, Bloomberg's Maria Tadeo joins us from Brussels. Maria, the Commission President is to brief leaders in a few hours. What should we actually expect from that?
Yes, Francine, and that briefing will be key. Every official that I've spoken to this morning agrees on that. The perception coming from the head of the European Commission, Ursula von der Leyen, will be crucial for European leaders to decide where to go next. And I would say, however, the mood here is not that pessimistic. There was no deal over dinner, but no one, frankly, was expecting one to emerge. What is key, and this is a line that I keep being pointed to in that statement, is that both sides agree they want to stay on the table and they want to explore every possible way to get a deal. So that intention, that political impetus is still very much there. The area where we could get a deal, however, Francine, is a European budget. There's a lot of speculation that a deal, a compromise between Hungary, Poland, and the rest of the European leaders and the rest of European countries could happen before the end of the summit tomorrow. That wouldn't block, as you know, the European Recovery Fund. That is key for Italy and Spain, and they are hoping that this can happen in the next 48 hours.
Maria, if is Sunday a real deadline, or can that be postponed? Like, if you look at the ratification period in the UK, what's the real deadline for negotiating this?
Right, Francine, and look, we're being told that when it comes to deadlines, many have come and gone when it comes to Brexit, but now time really is ticking in, purely because the UK Parliament will have to agree to this. The Prime Minister does have a majority, but the European Parliament here will also have to look at this, and they are dead serious, Francine, about this, that they want time to look at that hypothetical deal, to look at that bill before they vote it through. That would take us to December 28th, as cutting this very, very close. The European leaders today, by the way, will say that after that briefing from von der Leyen, if they believe that still things do not look good for a deal, that they will step up preparations and focus on a no deal instead.
Thank you so much, Maria Tadeo there in Brussels for us. Now joining us is Itai Tukman. He's a global head of FX at Citigroup. Itai, thank you for joining us. There's quite, a lot of volatility when it comes to pound. What does pound do from here until year end?
Sure. I mean, this upcoming Sunday is quite an important date, although, as we've seen in the past, and as you mentioned, there's been a lot of important dates that have come and gone, but time is running short. We still very much believe that a deal is going to happen, and we think that the market's consensus is there too, maybe 70 to 80% probability that there will be a deal, albeit maybe a skinny one. So I think the news will be if there isn't one, and particularly if the EU sort of walks away from the table. And throughout this entire Brexit process, the EU has been at the table, sort of ready to negotiate and negotiating. So I think that's the real big marker. Our expectations is that they signal that there either is a deal or there's a basis for a deal, which will be ironed out very, very quickly. That should be positive for the pound, and we should get a few percent rally if that happens.
Itai, when you look at what happens to pound, so you're expecting a deal. I think you're one of the more optimistic that we've spoken to on the markets. How much can pound strengthen by?
Well, sure. In the very, very short term, I think if there is this sort of narrow deal, you might get a couple of percent. The real question is what from there? I think there's quite a lot of pessimism in 2021 amongst the investment community that then the UK faces the sort of known challenges post-Brexit. Clearly the COVID pandemic adds to that. But my sense is more optimistic than most. I think that the pound has been and UK assets have been, very under-owned globally. And I think that there's been a lot of investors waiting and seeing how this will play out in order to look at what are fairly cheap UK assets, for example, in the equity market, to want to buy into. So I suspect that maybe the market's consensus on that for 2021 might be a little bit too pessimistic. We could see sterling trade to 140, for example, if we get a deal and this plays out.
I was looking at some of the volatility cycles, Itai, when it came to the spread between the 2 and 1 week volatility in cable, and it's definitely widened the most in favor of the shorter end. Does it show that markets believe that Sunday is a real deadline?
I think it does show that the market believes that Sunday is more of a real deadline than some of the previous deadlines. Whether or not I think it's the absolute final, I don't really believe it's the absolute final, but it's certainly a meaningful date.
I love that we're both talking about real deadlines and final. I'm sure that's CFA level 3. What are your top picks in the currency space?
Sure. I mean, we love the cyclical and commodity currencies. We're very bearish the dollar. We remain bearish the dollar. And I'll talk about a few currencies. Aussie dollar in the G10 space is one where we continue to think that there's plenty of upside. The Aussie terms of trades are at a near 7-year high, and the currency is nowhere near there. And if we're right about 2021's vigorous sort of synchronous global recovery, it should mean, further upside for commodity prices, and a reasonable rally in the Aussie dollar, which we think can go to 80 cents. In the emerging market space, we like similar cyclical currencies, the Mexican peso, which has, been grinding rally, for some months now, but we really think Mex can go to something like 18 or 1850 quite easily. Again, similar dynamics, very tied to the US and a big, vigorous recovery in 2021. Those are two top picks. And then on the euro, we think the euro can go to 125 to 128. We still see a lot of investors underweight the euro, and reserve managers will have to buy it.
Yeah, we'll talk about euro and ECB shortly, but do you avoid the dollar at these kind of levels?
We're still bearish the dollar, and we still think this move lower has legs, and both in the near term and in the medium term, there's plenty more downside for the dollar.
Okay, Itai, thanks so much. Itai Tukman there from Citigroup stays with us, and we'll talk a lot more about euro and at what point it becomes problematic for the European Central Bank. Coming up, rescuing the Eurozone, the ECB is set to deliver another blast of monetary stimulus to pull the bloc out of the pandemic crisis. We have that story next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Francine, Taiwan's Global Wafers has agreed to buy German silicon wafer manufacturer Siltronic. The deal, worth $4.5 billion, is yet another in a record year for the industry. It represents a 10% premium to Siltronic's closing price on November the 27th, when talks were disclosed. Now, home rental platform Airbnb has priced its long-awaited IPO above the marketed range, giving it a value of $47 billion. The firm is seizing on investor demand as its business roars back from the pandemic slump. The listing adds to an already record year for listings, with more than $160 billion raised on U.S. exchanges. And Elon Musk is upbeat about SpaceX's new test flight, despite a fiery ending. The mission for its next-generation Starship went mostly smoothing until the landing, when it failed to slow down enough, crashing into a massive fireball. The new design is for future missions to the moon and to Mars. And Pfizer says some vaccine documents it sent to Europe's drug regulator have been accessed in a cyber attack. It is the latest attempt to steal research on coronavirus. The European Medicines Agency is launching an investigation alongside law enforcement. The hack isn't expected to have any effect on the timing of the vaccine review. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Now, the ECB is poised to pump another round of stimulus into the euro area later today. Policymakers expected to add some 500 billion euros to their emergency bond buying program and extend it until at least the end of next year. The eurozone economy is also in a fragile state after being hit by new virus lockdowns and the continued uncertainty over Brexit. Well, still with us is Itai Tukman from Citigroup. Itai, thank you so much for sticking around. When you look at some of the euro levels that you gave me earlier, I think you had a stronger euro. Will we see some kind of verbal intervention from the ECB? Is higher euro problematic for the European Central Bank, or is it just the the timeline of how it gets there?
Sure. I mean, you might see some mild rhetoric on the euro, and obviously, the ECB doesn't want a higher euro. But I don't think we've reached that point where currencies have become beggar thy neighbor and the major input into the monetary policy decision. I think that fundamentally the ECB is looking at the Eurozone economy, quite worried about the impact of second lockdowns. Yet there's not much more they can do outside of what's been telegraphed, with the bigger PEP and the TLTRO extension. And so for me, the challenge is how do they actually act in a way that could impact the euro? And I think there are very few, likely tools at their disposal. And so I think they're just going to have to accept further euro appreciation as the flows into the euro continue.
What are you expecting from the ECB today? So there's, the market is questioning whether there will be, PEP and TLTROs, and whether it's extended for 6 months, 12 months, and the composition of both.
Yeah. I think the PEP number is probably 500 to 700 billion. I think that's fairly consensus. And the TLTRO extension. Again, the question is, do they do anything outside of that? I think that the probability, for example, of a further depo rate cut is very minimal. That would be a big surprise. But again, I think this ECB meeting is quite likely to be more along the lines of market expectations than maybe most think.
I mean, we're also expecting some kind of resolution possibly on the EU recovery fund. Does that strengthen euro if we have a backing down from Hungary and Poland?
Yes, I think these sorts of things, these sorts of dynamics have been strengthening the euro. I think the real major story is the sort of common fiscal issuance, the safe asset, which has been long demanded by the marketplace and particularly demanded by folks like reserve managers, who over many, many years have sort of underweighted the euro for obvious reasons and reasons of worry about fiscal integration. Now you have this moment which really looks like Europe moving more and more towards resolving, again, not in some kind of very big or grand bargain, but incrementally more fiscal integration is good for the euro. And it's going to bring flows into European assets, particularly that one.
How do you play, Itai, some of the Central European currencies? Is there anything to be said for forint or, some of the neighboring countries' currencies?
I don't really have a strong view on those particular currencies. They're quite tied to what's going on in the Eurozone. The pandemic situation is quite concurrent. I think in the emerging market space, for me, the real stories are elsewhere. They're in Asia, they're in Latin America, they're in some of the more higher beta EM currencies than the Central European ones.
Yeah, I think I saw in your note that you actually like renminbi. How do you play yuan?
So for me, you have to be a long-term owner of China, of Chinese fixed income and of the renminbi. And there may be a sort of once-a-generation move in the Chinese currency afoot, because fundamentally, it's no longer a trade policy tool. The currency is no longer, as I said before, a beggar thy neighbor question. And the Chinese are giving investors a very strong incentive to put money into China and to leave it there, with one of the few places that has tight monetary policy. And so, I think you could be in the realms of a multi-year secular move in the renminbi that you really want to be a part of.
What do you do with some of the oil-rich currencies? I know you have a view on, Canadian dollar, but also NOK. I don't know whether it's NOK stock or again, you play it in some other pairing.
Yeah, I think you want to own them. I think you want to own them all, at least in the short term. Personally, I'm quite a long-term bear on oil because of the real dynamics afoot around renewables, around the EV, all these kinds of things. But put that aside. In the short term, you're going to have a very strong recovery in 2021. You're going to have a lot of people get on an airplane. You're going to have a tourism recovery, probably like the world's never seen. You have a lot of very near-term demand for oil potentially coming in maybe late Q1, Q2 next year. And that front-end oil price might rally a lot. It's going to boost oil-based currencies, and we're quite bullish.
Okay, so this is short term. What's the medium term? Do you have to actually have a call to play into some of these currencies for when we see peak oil?
Look, I think, the question for some of those currencies is, can they transition their economies away from oil? I think with the likes of, for example, the ruble, very unlikely that economy will transition away from being a sort of hydrocarbon-based economy. But you can see what's going on, for example, in the Middle East, where it's very obvious and clear that a lot of those countries are thinking beyond the oil market. For example, I'm Israeli. The deal between Israel and some of the Middle East nations is a huge game changer for the region. And I think very indicative of what some of the maybe forward-thinking oil-rich economies are doing, to deal with that long-term risk.
Thank you so much for joining us today. Itai Tukman there, Global Head of FX at Citigroup. Now, coming up later today, we bring you full coverage of that ECB meeting. Of course, we have a look at what...
Okay, guys, new order coming up. I'm going to place a new order to sell Canadian dollar at 128.01. 128.01. Right here. Let's wait and see. Well, as you can see, it moved too fast. So I have to cancel the order. Order cancelled. Wait better time, yeah. Okay.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Facebook is being sued by U.S. antitrust officials and a coalition of states who want to break up the company. They are accusing it of illegally crashing competition and want to unwind its purchases of Instagram and WhatsApp. Facebook says the complaints are revisionist history and that its investments in the apps were what made them successful. Now, Hungary and Poland have lifted their veto over the EU's landmark stimulus package. That is in exchange for a delay in the sanctioning process that could strip them of the funds. The two countries oppose tying the money to rule of law standards. Now sanctions cannot be triggered before the European Court of Justice has a say on the rules, and that could take them more than a year. And China plans to sanction more U.S. officials and place new travel restrictions on American diplomats. The move is in retaliation for measures taken by the Trump administration over Hong Kong. China didn't provide the names of those it is sanctioning, but said the list includes people in the executive and legislative branches and their families. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. So where do we go from here? Last night's dinner between the Prime Minister, Boris Johnson, and Commission President Ursula von der Leyen ended without a Brexit breakthrough. Now, Sunday is a new deadline for negotiators to come up with an agreement on trade. Those key sticking points, fishing, state aid rules, and dispute resolution remain. Well, von der Leyen say the two sides are still far apart. Now, let's get analysis from Guntram Wolf. He's director of Bruegel. Guntram, I'm delighted to be joined by you because you always have some great insight into how these things operate. And I'm not really sure what to make of it. If there are remaining big differences now, what will change from now until Sunday? Is it just a deadline, another deadline that will come and go, or is there a real will from both parties to find something?
Well, thanks a lot, Francine. I think the way I think about this is really as a game of brinkmanship. So both sides have strong positions and strong views on critical issues, and both sides want the other side to fold, essentially, and to give in as much as possible. And so the 3 hours, I mean, nobody can tell me that, there was really something new being discussed. I mean, these issues are all on the table. We have been talking about them for years, but it is now the crunch time. It is the last weeks, the last days during which, an agreement has to be found. And so by putting up the pressure, by setting a new deadline, which really becomes almost the final deadline, I don't think there's much scope after that. You force everyone to reconsider, where and at what side, at what stage do you want to fold and how much do you want to fold?
Are both parties, Guntram, ready to walk away? Like, who has to lose most? I know this is maybe also political posturing to show back home to their own constituents that they're working really hard not to overstep the red lines. Will they both make concessions?
Well, I mean, both sides have to lose, would lose quite a bit, but I think you're right. The UK side is losing more than the EU side in case of a no deal. So the tendency here from a sort of purely economic point of view would be for the UK having to fold more and having to give in more than the EU side. But of course, the domestic politics is again a different thing. I think the UK Prime Minister has a fairly strong political base for his strategy. And in Europe, it's much more diverse, as you know. But I think it was quite important that the German Chancellor weighed in, I think, the day before yesterday, also with a clear statement, well, we are ready to walk away. And if Germany is ready to walk away, France is anyway more than ready to walk away. So at the end of the day, I think the EU is very tough on this. And I think they are really tough. We are really tough, so to speak, because so much is at stake. And there's a genuine fear that if state aid control and the level playing field is not fully guaranteed, that then the UK could see major divergences, perhaps, or even the entry of Chinese firms via the UK into the EU market, and so on and so forth. So a lot is at stake, and the EU does not want to get this wrong.
Do you think we'll have a deal, Guntram? And if we don't have a deal, are we prepared? We saw a white paper, I think, from the EU side yesterday saying, what some of the services will be disrupted and what they have to do now to ensure that there's still continuity in January. Is now a little bit too little too late?
No, but I mean, are we prepared? I think there is no question to my mind that if there is no deal, it will look unpretty, and we will see economic consequences that are, especially in the beginning, quite burdensome because people are not prepared. I mean, the big companies are prepared. The small, the SMEs, they are not prepared. The SMEs will, all of a sudden face customs formalities, and so on and so forth. So I really think there will be an effect for the SMEs, also for the fisheries, for the fishermen, the French fishermen. I mean, all of these people will feel, I think, the impact of a no deal, especially at the beginning. And in the medium term, it's the regulatory divergence that will matter, and that will also weigh on the economy on both sides. But again, overall, the UK side has more to lose than the EU side.
Guntram, what do you make of the EU recovery fund? So we understand that a possible last-minute deal has now unlocked the funds, but the dispute really lays bare, the growing split at the heart of the EU. How does the bloc move away from this?
Yeah, I mean, I think the EU Recovery Fund is, of course, a huge issue. It's politically more important than Brexit. It's politically more important because it is important for the recovery, but also the way it is structured sets precedents for future schemes. And it's therefore really crucial to get this right in terms of the governance. And I think the fact that Poland and Hungary have agreed to the EU Recovery Fund and have agreed to a mechanism that ensures that payouts are done in compliance with the rule of law, I think is certainly a positive step and a step in the right direction. Now, it's true that there has been this decision to inject the European Court of Justice in between, which could slow down things. But overall, I would say it is still quite significant that now the EU can actually stop payouts to a country based on concerns about the rule of law and get the backing from the European Court of Justice for it. So I think this is, I mean, in terms of the structure, it is really, again, a push where the central authorities have more say over what is happening at the national level. And I think that's the right direction of travel in a situation where so much joint money, EU money, is distributed to all of these countries. So you can't just distribute money to EU countries without strict oversight mechanisms. And here we have gone a good step in the right direction if that compromise goes through.
But longer term, will we see will it expose the inability of the EU to really have influence on, foreign policy and climate change if the bloc is uneven with this, relationship which is left to be desired with certain countries?
Yeah, I mean, look, I think the EU is not a state. I mean, that's very clear. The EU is a group of states, but it has, in some dimensions, some state powers. And when it comes to foreign policy, we still have unanimity rule, meaning every country can veto, as it is with the budget. But the relation, and what we've learned from the budget is that money talks and political pressure talks, and yes, one can overcome resistance from a minority of countries. And when it comes to climate change, I think a large majority of EU countries is committed to really moving ahead and is also committed to use it as a foreign policy instrument, also to impose foreign carbon border adjustment mechanisms on third countries that do not comply with the higher EU rules. And I'm sure that the geopolitics of the Green Deal will be big and will come forward.
Great, thank you so much. Guntram Wolf there, Bruegel Director, talking to us on Brexit and, of course, the EU Recovery Fund. Now, coming up, 94% of companies say they have seen disruption to their supply chains this year. But will COVID bring lasting change to the way that goods move around the world? We'll discuss that next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, how will the coronavirus reshape global supply chains? 94% of companies in a new survey reported at least some disruption to their supply chains this year. Euler Hermes Group spoke to more than 1,000 firms across 4 European countries and the US. Over half of the European companies and more than 2/3 of the American ones say they are looking to find new suppliers. But there is also no sign of a massive move towards reshoring, with less than 15% planning to return production from overseas. Well, I'm delighted to be talking about this supply chain shift with Wilfried Verstraete. He's the Chief Executive and Chairman of the Board of Management of Euler Hermes Group. So thank you so much, Mr. Verstraete, for joining us. When you look at supply chains, how much of these supply chains have shifted pre-COVID-19 because of the trade war between the US and China?
Oh, very few. very few, because the first of all, the shift of supply chain is not something you can do overnight. It requires quite some organizational changes, quite some investments as well. And whilst there were a lot of indications that trade barriers would increase and thus reinforce or incentivize people to do some reshoring, what we have seen so far is that instead of doing some reshoring, companies have much more opted for nearshoring, meaning reducing the delays, reducing the distances, but we have not observed a great, massive move into reshoring.
Right. But so where are they trying to move to? Like, when you look at COVID-19, so, you know, it's now past if we look at 2021 and the arrival of vaccinations. So what are companies worried about? Are they worried about a next pandemic and how to be more nimble? Or do they need to be more flexible in their supply chain? What are they pointing to?
Well, what they're looking at, of course, is to secure supply chains. And as we have seen earlier this year, when there was also many restrictions being put in place in China, is that suddenly a lot of companies were just forced to stop production because they could not get the necessary material to continue their own production. So what we see is that people are looking to diversify suppliers, and that is also looking at new supplies, so not necessarily completely changing, but to be less dependent on single suppliers. Because we have observed that suddenly, and just look at what happened also in the pharmaceutical world, suddenly people discovered that 80–90% of some molecule came out of one country, in this case China. And so we're getting back to the very basic question, never put your eggs in the same basket and diversify your supply chain. So that's the first one. The second one is to do some nearshoring, have suppliers that are closer to home, so that you reduce the risk of transportation and delays in transportation.
Is all of that inflationary or deflationary?
It's inflationary, absolutely, because when people have been looking at notably China for as a supplier, it's not necessarily about the quality, it's more about the cost. And you also have observed that by concentrating the supply from a limited number of suppliers, you can, of course, have more leverage in negotiating pricing. So it was all about getting the cheapest products for your own supply chain. But at the same time, when the supply chain then is interrupted or broken, the expense in terms of revenue that you miss out is huge. And so what we have seen is that especially in machinery, equipment, IT, tech and telecom, but also in energy utilities, there were huge disruptions, which was much less the case, for example, for chemicals and automotive companies.
Thank you so much. We'll come back to you, and we'll also ask about how that impacts actually ESG thinking when looking at new supply chains. Wilfried Verstraete there from Euler Hermes Group stays with us. Now, coming up, we also speak a little bit later to Anand Menon. He's director of UK in a Changing Europe. That's on the Brexit negotiations and the fact that we now have a new deadline. Not sure whether it's a real deadline, but that's at 10:30 a.m., that interview with Professor Menon. That's 10:30 a.m. London time. Up next, though, we'll discuss the future of the European insurance industry also after COVID. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
I truly hope that an agreement can be found, because even with an agreement, it's going to be very painful and difficult. But with a hard Brexit, it's going to be really painful, especially if people losing their jobs is the last thing we need right now. So I truly hope an agreement is still possible. But of course, not at any price. There are limits to what the European Union can do.
Well, that was European Commission Executive Vice President Frans Timmermans speaking yesterday. More on Brexit, of course, throughout the day. And then we're also getting a white paper from the European Union, actually looking at contingency plans. So these are contingency measures, for example, to keep planes flying and goods coming into the UK and from the UK into the EU in case of a no-deal Brexit. I know our reporter in Brussels, Alberto Nardelli, also had spoken to officials yesterday with knowledge on the matter. And again, they had laid out these contingency measures that would keep trucks on the road if both sides fail to reach an agreement by the end of the year. Now let's get more with our guest. He's Wilfred Verstraete from Euler Hermes, and we were talking about supply chains. Now we can also focus on the future of the European insurance industry after COVID. Mr. Verstraete, let's just go back quickly to what we were talking about on supply chains. As more companies look to diversify, to not have all eggs in one basket, as you put it, how much are they thinking about ESG? How much are they thinking about more climate-friendly supply chains?
Oh, it's definitely a topic that is very high on the agenda. And do not underestimate the pressure that comes from the end customers about ESG. I think people do understand that it doesn't make a lot of sense to have goods travel several times around the world before they reach the end customer. And we know that in terms of ESG impact, transportation of physical goods is one of the main contributors to, I would say, the negative impact on climate change. So companies definitely are looking at not necessarily reshoring everything to their home country, but at least to have shortened supply chains and to look much more for suppliers that are within a reasonable range of their own production site and or the end customer.
Where do you see the insurance industry actually going into next year? I know, there's a lot of hope that the economy will pick up because of vaccine. I also want to ask you about credit backstops in Germany. But is it going to be easier in 2021, or are you worried that we'll see surprises?
It's extremely difficult to forecast because until a few weeks ago, there was hope that we would continue the decline in number of new cases of people being infected. What we see in the last 10 days is that we have reached a kind of plateau, and that in many countries the number of cases is no longer decreasing and even slightly increasing. So all hopes are now put on vaccines, but it will take at least, I suppose, 1 or 2 months before we can see the first positive effects of the vaccine. And then, of course, the whole question is how many vaccines will be available and how do you logistically organize to vaccine an entire population? Who comes first? Who comes last? What kind of social impacts might that have? So we're not out of the woods yet.
What's your take on, I know Germany has extended the backstop for credit insurers, I think to June of next year. Does that need to be extended further? Do you worry about bankruptcies in the next 6 to 8 months?
Yes, there will be at some point in time a huge rise in number of insolvencies. Absolutely no doubt. What we have seen since, let's say, 5-6 months from today, is that the number of insolvencies has dropped significantly. It's totally counterintuitive, but that's reality today. And there are several reasons for that. First of all, to use a more broader image, you can see that many companies today are under artificial oxygen. And, you have this famous, I don't like really this concept, but I think it expresses clearly what we're talking about. You have a huge number of zombie companies today. Many companies that under normal circumstances would have gone bankrupt, but are kept alive thanks to a large number of measures that governments have taken. Like the moratorium on insolvency declarations, the huge amount of direct or indirect loans that have been granted to companies, the huge subsidies that many countries have on temporary employment, and so forth and so forth.
Thank you so much.
We're just pushing.
Pushing, and at some point it will come to a head. Thank you so much. We're out of time, unfortunately, but we'll have to get you back on very soon. Wilfried Verstraete there, the Chief Executive and Chairman of the Board of Management of Euler Hermes Group. Coming up next, more Bloomberg Surveillance.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
A Brexit deal was not on the menu. The dinner between Boris Johnson and Ursula von der Leyen ends without a breakthrough. The UK and the EU set a new deadline of Sunday. The U.S. versus Facebook, officials call for a breakup of Mark Zuckerberg's empire, arguing his Instagram and WhatsApp acquisitions were intended to harm competition. And deaths in the U.S. from the pandemic top 3,000 a day for the first time. In Europe, Germany admits it's failed to contain the spread of the virus. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keane in New York. Tom, also back from the festivities of, I'm sure, having scallops and turbot yesterday. And we look at, of course, what happened in Brussels, Tom. A lot of, observers say, yeah, we have a new deadline of this Sunday, but actually that could be extended certainly by a couple of days. But the Facebook story, I have to say, made me stop in my tracks, Tom. You and I have been doing this for many years together, and every time there was regulation in Europe, you'd say, well, that's very un-American. It would never happen in the U.S. Well, there you go. Well, they're trying to maybe go after your tech giants as well.
We have seen this before, and I will never forget, Francine, I can't remember where I was sitting, when there was a single headline across the Bloomberg, the Department of Justice drops its case against Microsoft. And yeah. I don't have any wisdom on this other than to say we've seen this before, and it does go back in the culture of the country to Standard Oil and Ida Tarbell. We'll have a lot more on this through the day. What I would say, Francine, is there's a stew of news out there led by the ECB anticipation. And what I'm watching more than anything is the German two-year yield. It signals disinflation and, again, ever lower, greater negative yields.
Yeah, the ECB meeting, Tom, is quite interesting because I think there's no one that I've read who's anti-consensus. So everyone's expecting more on PEP, more on TLTRO, and there's a question of whether it's 6 months and 12 months. So we could see a big repricing in markets if everyone is wrong. Now let's get straight to the Bloomberg. First word news in New York City. Here's Karina Mitchell. Hi, Karina.
Good morning. The Federal Trade Commission and a coalition of states have taken a major step toward the possible breakup of Facebook. They formally filed antitrust lawsuits. The suits accuse the social network of abusing its monopoly position to stifle competition. Regulators want Facebook to sell off Instagram and WhatsApp. Facebook calls the complaints revisionist history. Meanwhile, President Trump's campaign has asked to join a Texas lawsuit at the Supreme Court, challenging the president's election defeat. 17 other states have filed in support of the case that's been called a publicity stunt. Texas is trying to prevent electors from 4 swing states from taking part in the Electoral College vote next Monday. And Brexit negotiators now have until Sunday to come up with a trade deal. That was the result after a dinner between British Prime Minister Boris Johnson and European Commission President Ursula von der Leyen ended without a breakthrough. They agreed that talks should continue despite major differences. By Sunday, they said a decision will be made on the future of negotiations. And Airbnb's initial public offering is adding to a record year. The home rental business priced its long-awaited IPO above a marketed range to raise about $3.5 billion. That gives Airbnb a market value of about $47 billion. Shares begin trading later today. So far this year, companies have raised a record $163 billion on U.S. exchanges. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. So the data check right now, equities, bonds, currencies, commodities, and also fish I can't pronounce. Major debate here at Surveillance. How do you pronounce turbot, turbo? We don't know, Francine. It's a fish.
I cook it, but I don't know how to say it, Tom.
Exactly. We don't know how to say it here at Surveillance.
I can tell you for certain. In French, it's turbo.
It's there. Right now, we've got lots going on, including interesting conversations in Europe. Let's try to get through the data check. Matthew, help me here as we line up what we've got in Europe. Euro-dollar, 121.05. Looking at all sorts of things today, but as I mentioned earlier, the greater negative yields, the U.S. 10-year inflation-adjusted real yield is a negative 1.0059. That is a huge deal to see the real yield drive down ever lower, and the German 2-year to a negative 0.782 has my attention, to say the least. Francine?
Yeah, I think you know what has the attention of markets. So of course, it's about the ECB and what Christine Lagarde will do today. Whether it's more TLTROs to support some of the banks, whether it's actually something to do with PEP, whether it's both 6 months, 12 months. But I do think that they're trying to reassess also the outlook for these American tech giants after the news on Facebook. So just keep an eye on that. And then the pound still sliding after Boris Johnson's dinner with Ursula von der Leyen ended with no breakthrough for a Brexit deal. The euro also rising for the first day this week before the ECB decision. And then something that we need to keep an eye on is we understand that we could see a recovery fund. Leaders are meeting. I know our Maria Tadeo is waiting for a lot of them to arrive as we speak. But there's a turning point. We understand that the recovery fund could go ahead because Poland and Hungary have now agreed to it. Longer term concerns, Tom, about how this bloc keeps its influence if people are allowed to veto.
Yeah, on the data front, we really thank Stuart for emailing in. The Bloomberg terminal is a great thing. I can get pronouncers on fish. Where else can you do that? He weighs in with turbot. I don't know, Francine.
Yeah, I have turbot.
Turbo.
Is someone? Yeah, we'll continue. We should do a poll. No, we do think that it's turbot. Our executive producer is a fishman. He cooks fish. He's English, and he says it's turbot.
Unlike you and me,
who put that to
platter.
rest.
Yeah.
Yeah, we just do fish and chips. The ECB is set to deliver a fresh wave of monetary stimulus after signaling an expansion of existing pandemic response programs. With rates near or below zero, central bankers have relied on QE for firepower, and expectation around new stimulus measures are running high. Well, joining us now, Isabel Mateos Ilago, BlackRock, Global Head of Official Institutions Group. Isabel, as always, thank you so much for joining us. What are you looking for in the ECB today? There seems to be so much consensus that they will do something. And, the main question is whether it's 6 months or 12 months.
Good morning, Francine and Tom. Yes, I think that's right. They've been very disciplined at telegraphing that they would recalibrate their policy support package in a supportive way. I think, look, what's important is how they evolve their narrative from a focus on the size of the support to a focus on the duration, because that's really what's important. If you want governments to feel that they can keep providing fiscal stimulus without being worried that interest rates are going to rise against them, they need the ECB to say we're going to be in the market for a longer time than previously signaled. And they can do that by saying, okay, we're going to extend the PEP by 6 months or 12 months. Frankly, it doesn't make that big of a difference because if they do 6, they always have the option to do another 6 later. But very importantly, when are they going to stop reinvesting? Because that's really key. The size of the balance sheet, if they commit to keeping it at the current size for very long, then that's very supportive for governments. Same thing on TLTRO. Will they move the rate to increase the subsidy component? That would be a boost for banks. That would be a boost for bank lending. But most important is signaling that they will extend it in time so that we know there will be continued credit growth and support from banks to the economy. As you know, the European economy is very dependent on bank lending as opposed to, more reliance on capital markets in the US. So this TLTRO program and the PEP are, of course, very important. But duration more than size, I think, is what the market wants to hear.
Isabel, I know Tom probably wants to talk about euro strength in a second, but we also have news that Hungary and Poland could agree to the recovery fund. Does that change how Europe and the ECB views the economy in the next 6 months?
Well, by the time the ECB concludes its meetings and Christine Lagarde gives a press conference, obviously we won't know for sure that there is a deal, right? Because so far there is agreement between Poland, Hungary, and the German presidency, but we still need to make sure that the other 24 get on board. So we won't know that by the time of the ECB press conference, but for sure, the news that we got overnight that we were very close to a deal remove an element of uncertainty and give comfort that the ECB won't need to make up for potential delays. So that is a positive. But I would say that the base case was always that agreement would be found because, frankly, this support package was too big to fail.
Isabel, Tom Keene in New York, wonderful to speak to you. Thrilled you're on this historic ECB day. I want to talk to you about something that's BlackRock's wheelhouse, which is calculating duration, as you mentioned. How close is Europe to being Japan. John Farrell rattles off the numbers about how much debt's going to be sopped up by ECB to keep price up, yield down. How close is a broad EU and a narrow Frankfurt to being the debt market of Japan?
Yeah, I mean, that's a topic that's actually, talked about quite a lot, and there are parallels. There are parallels in the demographics. There are parallels in, ever larger amounts of sovereign debt being sucked up by the central banks. But look, I think there are also differences. The ECB still has a chance to really reverse the tide of these falling inflation expectations, which, the Bank of Japan failed to do back when, and then, really struggled to get them back up again. I think this is a real danger for the ECB, and frankly, it will be very interesting to hear how much emphasis they put on this. Unfortunately, it's unlikely that they will anticipate the concluding of their strategy review, because that would have been one way to say we're really concerned about this continued decline in inflation expectations, and we want to get ahead of this and announce, quickly that from now on we're going to take a more symmetric approach, or whatever else they will announce at the conclusion of their policy review. But I think the other big difference with the sort of Japanification context is really, frankly, the recovery fund and the EU budget, which signals this very strong determination to avoid the secular stagnation trap, to really put investment to work, to boost growth in a sustainable long-term way. So we'll have to see. Japanification is a risk, but we're not there, and there are positive elements to suggest we could avoid it.
Isabel, thanks so much. BlackRock's Isabel Mateo-Silago staying with us. Now, coming up later today, we bring you full coverage, of course, of that ECB meeting. That's at 8:30 a.m. in New York, 1:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keeney in New York. Any number of stories today, and driving forward the ECB story and what it means for debt Isabel Mateos-Lagos with us, of course, with BlackRock. Wonderful to have her with us today. Isabel, the fact of the matter is price up, yield down. Francine alluded to this earlier. How does a commercial banking system in Europe survive price up, yield down? Spanish 10-year about ready to go through zero, Portugal 10-year yesterday. And just as importantly, there's a crew demanding a greater magnitude of negative yields as a structural solution. What does that do to commercial banking?
It's tough for commercial banks. It's tough. The yield curve in Europe is quite flat compared to the US, so that doesn't help. But that's why the TLTRO program of the ECB is really indispensable to keep banks profitable and as long as they lend to the economy. So that was really a very clever way of distinguishing, in a way, insulating banks from the negative rate policy on the deposit rate, both with tiering and with the TLTRO subsidies that allows banks to preserve their profitability. But of course, it does remain a challenge. That's very clear. However, as the economy reopens, we do expect that sector to benefit like other cyclicals. And it has benefited quite a lot already in the last month.
Let's migrate to the game theory, and we do that with the imagery from the EU meetings. And it's very simple. Sometimes we forget there's Maria Tadeo, properly masked up, waiting to speak to the worthies here. They come in, they see Maria, they walk away. That's what Maria Tadeo does to world leaders and to EU leaders particularly. But within that ballet, Isabel, is the realization it is not the United States of Europe. It is 27 nations, depending on who's counting. How united is Europe into 2021?
I think it's very united, actually, certainly in terms of its ability to provide policy support to its economy and to put money where its mouth is on implementing a climate transition that delivers, carbon neutrality by 2050. There is going to be a lot of investment. There is going to be a lot of spending and policy support, and you don't get there in a straight line. But frankly, neither do you in the US or other countries. And frankly, if there's a part of the world where we're not worried about policy fatigue or policy disunion in 2021, it is Europe. And frankly, that's a novelty. So does everybody agree about everything? Absolutely not. There are big differences of views on lots of topics. But I think actually Europe made a lot of progress this year, and hopefully will continue to step by step, build up the institutional architecture that it needs. And of course, tonight we'll have a compromise. Well, hopefully there will be a compromise struck at the council on this rule of law mechanism and the budget. And because it's a compromise, nobody will get everything that they wanted. But what's important is the direction of travel. The direction of travel is going forward. We will have a much bigger budget with a rule of law mechanism in it, and that's what's important.
Isabel, is 2021 the year where we realize that actually the QE doesn't do much for the economy? It hasn't done much for inflation. What's the actual purpose at this point of more QE?
So I would disagree completely with the statement that QE doesn't do much. QE is playing an absolutely essential role in enabling fiscal support to be implemented, to be executed without a tightening in financial condition. It would have been impossible to have this amount of unified fiscal support across the European Union if it wasn't for QE. So that role is essential. But as I was saying earlier, increasingly the impulse or the support element comes from the duration, the length of time for which the support is provided, rather than the incremental purchases. And in fact, we've already seen in the second half of this year, the ECB has needed to purchase smaller amounts of government bonds because the objective of stabilizing markets and keeping financial conditions fairly loose has been met. Where the ECB is really struggling is with inflation. There's no question about that. And here it needs to do more. And doing more QE isn't going to be enough. That's very clear. If you look at inflation expectations in Europe, they're still below. They've picked up a little bit, but they're below the pre-COVID level. Big contrast with the US here. And so the ECB really does need to tell us very soon what are they going to do to meet their inflation target. And hopefully, again, as I was saying, it won't take until middle of next year to hear what their new monetary policy strategy is.
Well, that's a key insight, folks. The vector of U.S. reflation is so different from Europe. Isabel, thank you so much. Isabel Mateo-Silago with BlackRock and head of official institutions group. Coming up, Hussein Kanji. There's a little bit of news in the tech world. I'll check Facebook on the break. This is Bloomberg. Good morning.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. What we're going to do now is digress a little bit over onto the tech side of things. There's like 6, 7, 8 tech stories right now. We're going to squeeze 2 of them in here in the next 15 minutes. On Airbnb, Hussein Kanji joins. He's with Hoxton Ventures Partners. I'm really thrilled that he's with us today because I think he's a very clear and sane voice in the hype. Hussein, I think we can begin with the idea that Airbnb is not in Graham Dodd. It's not in Graham Dodd and Cottle. It's not even something Warren Buffett would understand from those iconic textbooks. When we take an IPO and we extrapolate out a value of a company, is that a legitimate valuation that we're looking at this morning of Airbnb?
I mean, I think that's broadly the question for almost everything in the tech industry right now. Interest rates are so low, and there's such a scarcity of these interesting companies.
Exactly.
That money in, and that's kind of what.
Okay, but this is, Hussein, I don't mean to interrupt, but this is absolutely critical. Is it a constructed, manufactured, or manipulated scarcity?
I don't think it's manipulated. I think it's a genuine scarcity of these companies. These are good companies, but they're being bid up to extremely high valuations just because there's such a scarcity of them.
But Hussein, what's the, what does Airbnb become? So we're not traveling at the moment. Is it because it will replace hotels? Does that explain the valuation, or just because there's just not much around?
I think it's a combination. I think the growth of the company has been extremely good. And I think the pandemic was extremely challenging for it as well as everybody in the travel industry. I was very surprised to see that its third quarter numbers were profitable, which is good news going into kind of a public offering. I think the goal is, this is not just this goes on to kind of disrupt the entire hotel industry and probably become a hotel company or hotel operator, like a meta operator of its own, similar to the way Booking did in kind of the early 90s or the late 90s, as it kind of grew up to be a dominant company. And to be fair, I think it's Booking, which is Airbnb's biggest competition. I mean, they're kind of on parity in the market. They're both kind of 50-50 market winners. The public markets don't really value Booking nearly as highly as they should if they're going to value Airbnb.
A bit there on Airbnb with Hussein Kanji. We're going to come back, and there's only one topic to talk about. There's no Ida Tarbell out there, but there is Facebook and the government. We'll continue on that here in a bit. Futures up 5, Dow futures up 46, NASDAQ 100 fractionally goes the other way. The VIX has basically done nothing through the week, 21.64. On balance of power today, recovering the senator from Florida, Rick Scott, with David Weston at noon. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Francine Lackman, London. Tom Keene in New York. Now, Tom, Facebook has been sued by U.S. antitrust officials after being accused of trying to illegally crush its competition. It is the biggest regulatory attack against a social media giant in its history. Still with us is Hussein Kanji, Hoxton Ventures Partners. Hussein, this is something that was largely unexpected, especially coming from the U.S. Does it mean that regulators will really scrutinize some of these big tech giants, or is this just a one-off?
Yeah, I think it's a dramatic change in policy for the U.S. government to go after this. I think Europe has been kind of lobbying for this kind of action for some time. I don't think it's going to be a series of these things. I don't think the government is very well staffed, particularly the FTC, which is what went against Facebook. And it's the reason why they've kind of roped in so many state attorney generals into the case, just to have the manpower to be able to fight it. And this is going to be a long protracted battle, because the government's going for the win. It's not just a small fine or a small settlement that they kind of want to go after. They want to fundamentally break up the company.
Will it be broken up, and in what timeline?
Yeah, I mean, it's a good question. I mean, historically, what you normally look at is you look at these things on a consumer harm basis. It's really hard to do that for the tech companies, because they actually don't cause that much harm. Like, all of us are kind of net beneficiaries of the different products and services that are free. So the government's taking a line which is saying, what could these companies have actually grown up into if they stayed independent? That's a hard thing to prove, because it's almost a what if type scenario. So I think this is going to take years. Mark Zuckerberg wrote an email to his staff and did kind of an all hands yesterday and suggest that this is going to be a long, protracted battle for Facebook. And I don't think this is something that the government can do, on multiple fronts, fighting Amazon or fighting Apple or fighting Google or fighting Facebook. And the FTC can only really do one of those. The FTC inherited Facebook and Amazon, Google. The Department of Justice inherited Google and Apple.
Who's saying there is a moment where those younger and even someone of my vintage look back on fondness at Bell Labs, Bell Telephone, and Rand, and they were way out front on this, on network externalities and network effect. The government has never prosecuted monopoly, given these massive network effects of the few survivors, the few winners in technology. Do they have the body of law to take on network effect, or are they going to prosecute a Standard Oil prosecution?
So I think monopoly law is fundamentally changing when it comes to these kinds of actions. So historically, you always look at this through the lens of, did the consumer get hurt? And that's how you prosecute monopolies. There is no hurt in this case. So the question is, did competition get hurt? And how can you prove that competition got hurt unless you understand what these companies, what could. Yeah,
but look, Hussein, this is brilliant. I mean, this is really, really important. So somebody wants to go out and start a new Instagram. They have every opportunity to do that, but are they defeated day one because of the mathematics of the internet, the Ethernet mathematics?
Yeah, I mean, I don't think you could do an Instagram today, and the question is, had Instagram stayed solo and stayed independent, could it have turned into a rival to Facebook? Now, I think there's a lot of intuition that says yes, which is why Facebook absorbed it, and it's such a crucial part of the Facebook empire today. But that's the line that the government's going to be arguing, and it's a new policy direction, and it's a new interpretation of monopolistic behavior, because there is no net harm to the customer that's obvious. They're not.
But then wait a minute. If there's no net harm to the customer, why are we doing this?
Well, it's competition. It's the what if clause. So if Instagram had stayed independent, there'd be a more competitive dynamic. The consumer would have benefited from having two people in the market versus one person who's aggregated all the power. This is going to be hard to prove for the government, and it's going to take a lot of resources, which is why I don't think the government's going to be doing a lot of these in parallel.
Okay, so who else is at risk, right? This is basically, and this is exactly the thinking of the Commission, and they've thought about this for quite some time. We've seen, monopolies, worries about competition, Hussein. Overall, does it mean that Google is at risk? Is it other companies as well that are at risk?
Yeah, so there are four targets. So the government, and they split it up kind of evenly. So the Department of Justice took over Google and Apple, and they're going down that strain. The Department of Justice has not been very successful in kind of lobbying their case. And the FTC took over Amazon and Facebook. And I think the FTC is putting most of its resources. It's chronically understaffed as an organization. The Commission is not a very well-resourced machine, particularly over the last few years. And so I think they're going to put all their kind of arrows behind this behind the Facebook target. And it's going to be a long, drawn-out legal battle because we're kind of changing law and policy in conjunction with going after these companies.
Yeah,
it's a new interpretation.
Hussein, what about Apple? I mean, this is, just to be clear, and Tom, every time we had, something from the competition commissioner in Europe, he said, this is un-American. Is the U.S. becoming much more like Europe?
Yeah, I mean, to some degree, the two regimes are kind of converging with this action. The U.S. historically has not done very much. So you have the DOJ fighting against Google. It doesn't have, like I said, very widespread support among the states. And then you have the Commission fighting against Facebook. And those are kind of the two opening flanks. And I don't think this is one where the government can go to war with all four tech giants at the same time. And these are, I think the Google one may be settled. The Facebook one, the government's going for the win. So this is going to be a long, drawn-out process. And so I think Amazon probably gets left behind in that because they go onto the Commission side. And then the question is what happens on the Apple side with the DOJ.
All right, thank you so much. Thank you, Hussein. Hussein Kanji, their Hawkson Ventures partner. Now let's get straight to the Bloomberg. First Word News, here's Karina Mitchell. Hi, Karina.
Francine, both Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi are hopeful there'll be a deal on a new stimulus package. Lawmakers working on a compromise plan face two roadblocks. One is a business liability shield. The other is aid to states. Pelosi said, quote, one way or another, we'll get it done. And for the first time, daily coronavirus deaths in the U.S. have topped 3,000. Americans are being infected with the disease at an increasing rate in the final weeks of the year. The CDC predicts by Christmas, more than 300,000 people in the U.S. will have died. And Joe Biden's son, Hunter, is facing a federal investigation into his tax affairs. Hunter Biden's foreign business matters became a flashpoint during the presidential campaign. Bloomberg's learned the investigation began in 2018. Hunter Biden says he's confident the probe will show that he acted legally and appropriately. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. And on Menon, I'll be coming up here with the United Kingdom and, of course, on changing Europe, changing breakfast, maybe changing dinner. Anand Menon here on Brexit Forward. This is Bloomberg. Good morning. Futures up 7.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The
politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I truly hope that an agreement can be found, because even with an agreement, it's going to be very painful and difficult. But with a hard Brexit, it's going to be really painful, especially if people losing their jobs is the last thing we need right now. So I truly hope an agreement is still possible. But of course, not at any price. There are limits to what the European Union can do.
That was Frans Timmermans, the EU Commission Executive Vice President, speaking to Bloomberg. Maria Tadeo sounding hopeful that a Brexit agreement can actually be reached. Now this, as the EU Commission also released contingency measures, which were seen by Bloomberg yesterday for a no-deal Brexit, with negotiations resuming in an attempt to reach a deal by the new Sunday deadline. So I don't know whether this is trolling or why we're only finding out about contingency plans 2 weeks before the real deadline, which is December 31st. Now let's get straight to our Maria Tadeo, who joins us from Brussels. She's on Leaders Watch. I know you're waiting for a lot of these heads of state to come in. Maria, if we can't have an agreement, if we didn't have an agreement yesterday, what makes people hopeful that we'll get something on Sunday?
Well, Francine, there's two things here. One is that they weren't actually hoping for a deal yesterday. The Europeans were briefing very hard on this, that this was not really about a deal, but it was about political momentum and injecting renewed energy into the talks. And to some extent, that is happening. We're now waiting to see what can happen from now until Sunday. In terms of today, Francine, it's very much about the briefing that Ursula von der Leyen will give to European leaders when they meet here in Brussels in a few hours. I just spoke to the Prime Minister of the Luxembourg, Xavier Bettel, who repeated that line. He wants to hear from Ursula von der Leyen, but he also had a warning, which he said, for me, it's best to go for a no deal rather than a bad deal. And that's almost the theme that we hear repeatedly. They need to focus on the detail, and there's still sticking points that need to be resolved before they can give the green light to any deal that may come from now until Sunday.
Maria, I tried to read on this as an outsider 1,291 days into this soiree, and for the life of me, I don't understand where the pressure is for the EU to do anything. It seems to me exactly like July of 2016. Isn't every advantage of the EU to just wait out Britain?
Well, Tom, that is exactly what they're doing. That's very much what they're doing, to wait, because they feel that in most areas, except for fish, and I should be clear on that, the Brits do have the upper hand on the fish. It's their sea and it's their waters. But on every other area, the Europeans do believe they have the upper hand, and they just need to wait until they blink first. And that's very much what Emmanuel Macron, who's here, by the way, too, believes, that the EU needs to negotiate on a position of strength. There are some other voices, however, Tom, that do say that no one knows what happens after a no-deal Brexit. There could be big disruptions from everyone here. Just best safe to go for a compromise. And that's very much the Angela Merkel line. So, yes, wait, but the question is how much?
Maria, our Alberto Nardelli over in the Brussels Bureau also broke the story that today the EU Commission would actually publish these contingency plans. Is it a little too late? If we have a no-deal Brexit and, you know, a lot of companies are not ready for this ugly transition, what happens January 1st?
Well, Francine, what they say is that they are ready for a no deal. The reality is that many businesses don't know what a no deal would look like on January if we do get to that point. What the Commission also says is that they're putting this today, but this has been in the making for weeks now. But my readout, and this is to the extent the way that we're looking at this, is that this is mostly political. They're doing this today ahead of a crucial summit, ahead of a crucial briefing, to pile on the political pressure to say, if we don't get a breakthrough, we're ready to go for no deal. We're putting the plans. We're ready for that.
All right, Maria, thanks so much. Our Maria Tadeo there on the ground in Brussels. Now, sticking with Brexit, big gaps remain as talks continue after a dinner meeting between Boris Johnson and the EU Commission President Ursula von der Leyen ended without a breakthrough. Now, joining us is Anand Menon. He's UK and a Changing Europe Director. Anand, as always, thank you for joining us. Is it 50-50 if we get a deal, or is it a smaller chance of that?
I'm starting to think it's a smaller chance, because what we've arrived at now is a point where there is a fundamental difference of philosophy and of principle between the two sides. So this isn't, if the talks don't succeed, this won't be a failure of negotiation. This will simply be a reflection of the fact that the two sides are approaching this question of what rules the UK could and should be bound by post-Brexit from fundamentally different angles.
But it's always been the case, has it? What's changed in the last 4 years of negotiations?
Well, bear in mind, we haven't been negotiating this for the last 4 years. We've only been negotiating the future agreement since the end of last year, so only for the last year. And I think two things have happened. One, I think the EU have dug in a little bit on their demands that the UK sign up to certain minimal standards. Part of that, I think, is due to a lack of trust in the Boris Johnson government. Equally, I think Boris Johnson has doubled down on this maximalist definition of Brexit, which isn't just Brexit means leaving the European Union and no longer being a member state. Brexit now means taking back absolute control over all our laws, so it is simply unacceptable that Brussels expects us to be bound by any legal commitments going forward.
Anand, I find this to be the oddest of negotiations, 1,291 days in. Explain the incentive for EU, for Brussels, to come to an agreement. I can't see where they have an incentive to come to an agreement other than to export the marginal BMW into London.
Oh, I think the EU does have several incentives. In the first place, there is the economy of the Republic of Ireland to think about. A member state of the European Union will face consequences economically, almost, though not quite, on the level of those that the United Kingdom will face. Republic of Ireland agriculture is in for a rude shock in the event of a no-deal Brexit. So that's one reason. More broadly for the EU, firstly, I think they recognise that there are economic gains to be had from having a deal that won't be there in the event of no deal. Secondly, I think they think that if we get a deal, at least it's the basis on which we can build in a future relationship with the United Kingdom going forward. And I think thirdly, and politically, and perhaps most importantly of all, there is a recognition that if these talks break up, the ultimate outcome might be significant acrimony between the United Kingdom and the European Union, which will get in the way of efforts to collaborate across the piece. That doesn't just mean on trade or the odd BMW. It means it might be harder to work together in NATO. It might be harder for the French and the Brits to work together in Mali. It might be harder to work together on the COP26 environmental summit that's being held in the United Kingdom at the end of next year. So I think politically there is an incentive to try and get something out of these talks as the basis for a constructive future relationship.
I look again at where we are, and I guess to Francine's wonderful question of just simply what's next. What will you be watching for moving to the end of the year? I mean, who blinks here, I guess, is the arch question.
Well, when it comes to the negotiations themselves, hand on heart, I won't watch that carefully, because I don't think anyone knows what happens in the room apart from the people in the room. I don't know what's in Boris Johnson's mind, whether he's thinking maybe I should compromise or not. But after the outcome, there are lots of things to look for. There are the contingency plans you were just talking about. What do they include? How much trade mitigation is there? There are the preparations made by businesses, because on this side of the divide, at least, it's pretty apparent that businesses haven't started preparing themselves well enough. It is the degree to which each side insists, as of the 1st of January, on implementing the new rules in their entirety, or the degree to which there is a bit of flex that tries to minimize the chaos at ports that we might see otherwise in January. And of course, in the event of no deal, it is for any sign that either side, I suspect the UK side, is willing to go back to the negotiating table, because ultimately the impact of no deal is too severe and they'd like to start thinking again about some sort of deal.
Professor, when you look at what exactly it means for industries and companies if we were to not get a deal, I mean, we find out about contingency plans, but have they been briefed before? How much chaos will there be at the border if there's no deal?
Well, I think the British government is thinking in terms of between about 3,000 and 7,000 lorries piled up somewhere near the border, because the drivers have incorrect paperwork, they haven't filled in the forms at all, or they've done so wrongly, which is why the government is building all these lorry parks in Kent. It's very, very hard to predict what will happen in January. We don't know, for instance, how many on the EU side have already taken measures to say, okay, look, there's no point trying to source those products from the UK anymore because there'll be disruption. We should go to Slovakia or Spain Spain or somewhere else instead. And of course, the effect won't be immediate because New Year's Day falls on a Friday, which means we have the bank holiday and then the weekend, after which things kick back into life quite slowly. But my guess is, even with a deal, and more so with no deal, we will see some disruption at those ports, because remember what Brexit is about. It is about making trade with your nearest and closest trading partner more expensive and more cumbersome. And it would be remarkable if that were to happen without some sort of disruption.
Okay, and is it in Boris Johnson's interest to have a no deal just when the economy is already reeling because of COVID? If the two sides won't give up on the red lines, who's most likely to blink first?
At the moment, I'm not convinced either side will blink first. Now, the way you phrased that question was interesting, because I think that one of the things we've learned from the Brexit process is that the era of the primacy of the aggregate economy has passed. That is to say, it is simply not the case that the Prime Minister is thinking, I need to do the thing that will cause least damage to the national economy in the short to medium term. That's not what Brexit is about. Brexit is about political principle, and it's that will come first. But you're absolutely right. A no-deal Brexit will have a greater negative impact on the British economy than a Brexit with a deal, though bear in mind, and I think this is utterly crucial to the argument, what forecasting from the LSE shows quite clearly is that with or without a deal, Brexit will have a greater negative impact on the UK economy over the next decade than COVID will have had.
Very informative, and thank you so much on this endless debate, of course, with the United Kingdom and a changing Europe. Coming up on Bloomberg Markets, David Blanchflower. He is ecstatic, not about coming on Bloomberg Markets. Blanchflower ecstatic over the rising tide of Wales, of Cardiff football. Blanchflower, 1 p.m. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Elon Musk is looking at the bright side. SpaceX's first high-altitude test flight of its next-generation spacecraft ended in a massive fireball in South Texas, but Musk sees the mission as a success. Everything in the 7-minute flight went smoothly until the landing. Musk says pressure in a fuel tank was too low, causing the landing speed to be too high. And it's one of the SEC's largest settlements ever tied to accounting disclosures. General Electric has been fined $200 million for allegedly misleading investors about the finances of its power unit and an old insurance business. GE didn't admit or deny the SEC's findings. And it was quite the debut for DoorDash. Shares closed up 86% from their IPO price. And that gave the food delivery company a market valuation of more than $71 billion. Bloomberg's Emily Chang asked DoorDash's CEO, what's the investor's case that the company is worth so much?
One half of our goal is building the largest local commerce marketplace in which we're bringing everything inside your city to you in minutes, not hours or in days. And the other part of our goal is to make sure that we can take the products we built for our marketplace and give them to merchants in the form of ordering as a service, logistics as a service, so that they can build an end-to-end technology solution.
And it is a renter's market in Manhattan. Apartments here haven't been this cheap to rent in 10 years. The median rental price plunged 22% in November from a year earlier to a little more than $2,700 a month. And landlords are offering concessions to fill vacancies. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Karina. Now, this is what the markets are looking at. Of course, it's all about the ECB. A lot of talk on the markets about whether it's a 6-month, a 12-month extension, but it's clear that they are expecting something to do with TLTROs or PEP or possibly both. So I look at euro. Talks also continuing with Brexit. It's moving a little bit on euro sterling. Yesterday, I was telling you about cable. Today at 0.9091. The pound really barely managing more than a no-deal Brexit anxiety at the moment, so we'll see what happens in the next couple of hours. And then a lot of the focus is also on Facebook with the possible breakup because of antitrust regulators in the U.S., Tom.
On the data, I'd look at euro just breaking down to a 120 and a 120.99. As I mentioned earlier, the 2-year yield in Germany really has my attention. Not out to new recent lows, but a substantial and growing negative yield as well. Coming up, I'm really looking forward to this. Can America recover? Gideon Rose has done it again. Samantha Power, Jason Furman, an exceptionally important essay by Shannon O'Neill on the new American industrial policy. Must watch, must listen. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health.
we must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This morning, guess who's coming to dinner? Well, there is panic in pound sterling and the euro. No, there's none. As Europe waits and waits and outweights Britain, it is day 1,291 of Brexit, and nothing has changed. Little has changed for Lagarde, the German 2-year, the Portuguese 10-year, now the Spanish 10-year. They signaled disinflation this morning, a critical ECB meeting. And, well, it is not Antietam of 1862. It is not the great Galveston hurricane of 1900. It is the one-day pandemic death in America of 3,000. Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York, Francine Lacroix in London. Francine, the news flow is extraordinary. We didn't mention one word in the last hour on this horrific pandemic. Extraordinary in America. What do you see from London on the pandemic in Europe?
Well, Tom, I know we look at the figures, of course, and we look at some of the measures and talk about a possible lockdown. We did have admission from the German government that they should have done much more. And again, this is significant because we go into a really critical period. It's the holidays where families get together and see each other. So that could actually change everything. But two big stories today. Of course, it's the European Central Bank.
Yes.
It's Facebook. And we also look at what's happening with Joe Biden's son and the implications for the White House.
Yeah, I would go to ECB front and center, and particularly on a markets basis. We'll get to the data check in a moment. What you need to know is the market set today on the Bloomberg for disinflation. With our first word news in New York City, here's Karina Mitchell.
Tom, thank you. The Federal Trade Commission and a coalition of states have taken a major step towards the possible breakup of Facebook. They formally filed antitrust lawsuits. The suits accuse the social network of abusing its monopoly position to stifle competition. Regulators want Facebook to sell off Instagram and WhatsApp. Facebook calls the complaints revisionist history. Meanwhile, President Trump's campaign has asked to join a Texas lawsuit at the Supreme Court, challenging the president's election defeat. 17 other states have filed in support of the case that's been called a publicity stunt. Texas is trying to prevent electors from 4 swing states from taking part in the Electoral College vote next Monday. And Brexit negotiators now have until Sunday to come up with a trade deal. That was the result after a dinner between British Prime Minister Boris Johnson and European Commission Ursula von der Leyen ended without any breakthrough. They agreed that talks should continue despite major differences. By Sunday, they said, a decision will be made on the future of negotiations. And Airbnb's initial public offering is adding to a record year. The home rental business priced its long-awaited IPO above a marketed range to raise about $3.5 billion. That gives Airbnb a market value of about $47 billion. Shares begin trading today. So far this year, companies have raised a record $163 billion on U.S. exchanges. Coming up on Bloomberg Markets, Brian Chesky, Airbnb CEO and co-founder. That's at 10 a.m. in New York, 3 p.m. in London. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Tom.
Karina, thanks so much. Let's get to the data right now. We're following 5, 6, 7 stories today. Very, very busy day. Futures up 5, Dow Futures up 60, just over 30,000 on Dow Futures. The VIX 21.70 signals nothing's moved in 3, 4, 5 days. In the yield market, It is a different story. I have a U.S. real yield under a negative 1%. To me, that's a huge deal. That's a game changer off the last number of weeks. That'll be a theme through the morning, no doubt. In the German two-year yield, negative 0.784. I'd also notice, Francine, Spanish yield to join Portugal, perhaps with a negative or even a touch of a 0%.
Yeah, Tom, the pound sliding after Boris Johnson's dinner with Ursula von der Leyen did not end in a breakthrough for a Brexit deal. They're meeting again, or at least negotiators are meeting again on Sunday. Euro rising for the first day this week before the European Central Bank policy decision. That's also expected to add some 500 billion euros to its emergency bond buying program. That could support some of the yields. I'm looking at euro dollar 120.95. And overall, if you look at European markets, they're fluctuating. Investors, again, assessing the outlook for American technology giants, and they're also looking at prospects for fresh stimulus. So it's these two counter forces, Tom, that is playing out in the market.
Very much in the 5 o'clock hour here in the U.S. We spoke of Europe, Brexit, all the stories there, of course, important leadership meetings. Our Maria Tadeo at those meetings. But right now on the United States, Emily Wilkins joins us, Bloomberg Government, Congressional and Campaigns reporter. Emily, I read the first 2 pages of the president's brief to the Supreme Court last night that he wants to join attorney generals in battling for this election. How will the Supreme Court respond to that? How will Washington respond in this continued battle?
We've yet to see how the Supreme Court's going to respond, but Democratic lawyers aren't really concerned about this particular challenge. They see it as a publicity stunt. They don't think that it's going to go anywhere. I mean, at this point, most states have locked in their number of electors, and that's probably what we're going to see heading next week into the official vote to make Biden the next president.
Does that conversation fold over into stimulus talks? I find that hard to believe, whatever your political beliefs. But is the world of the Trump debate on the election actually coloring the stimulus debate?
It really hasn't at this point. Lawmakers, I mean, this is a debate that lawmakers have been having well before the election. It is carried into well after the election. I mean, to be honest, I think the biggest thing impacting it is the sense that everyone wants to make sure that they're going home for the upcoming Christmas break. And so we have seen a couple of breakthroughs in recent days on the stimulus government funding package.
Emily, we found out that Hunter Biden has said the U.S. attorney is investigating his tax affairs. How much will the president-elect be distracted by this?
That's a fair question. I mean, Biden has been facing allegations about his son for years now. He's faced them on the campaign trail. He faced a lot of attacks from Trump. However, just a couple quick things to note here. This investigation, it began in 2018, so it's not necessarily a recent thing. Hunter Biden also has faced tax difficulties in the past. So while I'm sure this is something that will probably come up among certain corners, this is definitely not a new thing for President-elect Biden to be dealing with while focused on his other responsibilities.
Yeah, and just, for the record, is Joe Biden in any way implicated in these two investigations? So one by the DOJ, but also the IRS inquiry?
No, all the investigations into Hunter Biden at this point have not implicated the president-elect at all.
Emily, what do you look for today? I mean, we're buried with news. We've got 5-6 news stories. For us, Emily, it's the ECB meetings really front and center. But what's the Emily Wilkins Thursday look like?
On the Hill, I think everyone is really just focused on can Republicans and Democrats get an agreement to, A, keep the government funded past next week, Friday, and B, is there going to be some coronavirus stimulus? Because there's been a lot of talk, there's been a lot of things put on the table, and yet it seems like the two sides are still far apart. We still don't have an agreement, and time is running out.
Emily Wilkins, thank you so much. Greatly appreciated. A Washington brief this morning on any number of stories. We'll see which Christmas party she's attending. That's a real controversy in itself. On Bloomberg Markets today, the gentleman who is gone ka-ching. He's doing better than good. Airbnb, their chief executive officer, Brian Chesky, in the 10 o'clock hour. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix in London, Tom Keene in New York. Thrilled you're with us today. A lot on international relations and politics, but also the markets is a litmus paper, and there's no question the theme we're seeing right now, particularly in Europe, is price up, yield down. Cameron Kreis is expert at this. Bloomberg macro strategist barely describes what's going on. Cameron, I want to talk to you about the disinflation that clearly is out there. The markets are gaming ever lower yields. What does that signal, not to Cameron Kreis or to Francine Lacroix, what's it signal to Christine Lagarde?
Well, evidently that you need to do more. Clearly, the ECB has signaled that they're going to accelerate or increase the amount of stimulus they're trying to provide to the economy. It can take a number of dimensions, extending and increasing the pandemic purchase program. I guess the consensus is about 500 billion euros over 6 or perhaps 12 months. They're going, like almost certainly, to extend the horizon of their targeted long-term refinancing operations. We had another one, the latest one today. The uptake was modest, 50 billion.
Yeah, but Cameron,
50 billion euros.
Cameron, I get all that, and I get the pretty charts as well. I want to know what the new degrees of freedom are as Europe becomes like Japan. We've seen somewhat a zombie Japanese bond market. Are we going to get a zombie debt market because central bankers have lost their degrees of freedom?
Yeah, I think that's absolutely the risk. You may recall the old Frank Sinatra song, "I've got the world on a string." Well, the problem now is that the world has the BOJ and to an increasing degree the ECB on a string, and if they try to extricate themselves, all they do is push on it. Listen, I think there's an issue here of demographics, of global excess capacity, which is restraining inflation, not only in Japan, not only in Europe, but also in the United States and China and elsewhere. And there's also, I think, a sort of financial or monetary hysteresis where once you have these super low interest rates for such a long time, people assume that they're going to continue forever, and there's essentially no urgency to borrow or what have you, because you know the money will always be cheap. And at the same time, those who are saving, and guess what? In aging demographic societies, people are living off of interest income. You're essentially reducing the amount of income of elderly or aging savers. And the empirical evidence is not that they spend, but that they actually save more than they quote unquote should be to make up for the interest income shortfall.
Cameron, we're looking at pictures of EU leaders arriving in the Justus Lupus building over in Brussels. We are just hearing from actually Viktor Orban of Hungary, and we understand that after a lot of pushback from Poland and Hungary, they're now ready to agree on a deal for the EU Recovery Fund. Does that make the ECB's job significantly easier?
Well, one would hope so. It's when they look back at when the history books of this era are written, obviously most of the attention will be focused on the public health dimension. But I think the policymaking dimension will deserve some scrutiny, and it won't necessarily be favorable. I mean, we've been talking about the pandemic relief in Europe for 6+ months, and so the clock is ticking. I think it would have been a lot more effective if it had been enacted much earlier and deployed much earlier. And we're seeing the same thing, albeit to a somewhat lesser degree, here in the United States, where we did have some aggressive fiscal package earlier in the year. And to date, at least, the economic data has held up, although obviously on Main Street, there are certainly individual cases where people are in significant distress.
Has the ECB effectively become a yield curve controller? And Cameron, are we underestimating it? They don't want to be seen as that. So are we underestimating the fact that they could actually do something to move away from being labeled that?
Oh, listen, absolutely. I mean, they've got the entire bond market under their heel. The stiletto on or whatever, some sort of sharp-heeled boot on the throat of the bond market. Volumes have collapsed in, say, bunds. The German 2s10s yield curve is about, I think, 17 basis points, all deeply negative. Yeah, I mean, absolutely, they've controlled that. If interest rates weren't negative, if they hadn't bought all these bonds, would yields be here? Of course not.
Cameron, one final question, and you just nailed it with the stiletto, idea. The reality here is it's an artificiality. We are in negative territory. With that said, select theorists want to increase the magnitude of a negative interest rate experiment. From your years of experience, what does that do to commercial banking?
Well, I mean, give me a break.
Thank you. That was academic. Got it. Nailed it.
Never. It's Thursday. No break, Cameron.
Well, here's the thing. Since the ECB implemented negative interest rates, they've essentially charged or taxed, is another word for it, European banks by about 25 billion euros, which is how much negative interest these banks have had to pay the ECB. At the same time, the Fed has paid U.S. banks, my calculation is something like $117 billion. So you look at the discrepancy between the Fed paying U.S. banks and the ECB taking money away from European banks. You look at the relative performance of U.S. versus European banks. You look at the relative performance of U.S. versus European economies, and you have to kind of scratch your head and wonder, you know what, maybe taxing our financial intermediaries, particularly in an economy like Europe, where so much more credit flows through the banking system as opposed to the corporate bond market, maybe that isn't the best idea.
It sets up for 2021. Cameron Christ, turn around and play with a Bloomberg terminal. You're great at it. Our Bloomberg macro strategist joining us here on really seriously an historic day for the ECB as well. All sorts of stories coming out about Brexit. Maybe people will act. Mr. Gorman and company, they act. They're going to move $120 gazillion of assets to Germany. I have no idea what that means. Maybe Morgan Stanley's buying Tottenham, and they're going to move Tottenham to Germany. Now, I don't know.
Tom? Yeah.
It's a football team, Francine, Tottenham.
Right.
So
we heard Goldman Sachs actually moving $60 billion to Europe, and this just goes to the trend of many banks trying to beef up their operations ahead of a possible no-deal Brexit, or even ahead of Brexit. It just leaves it a little bit last minute, but it's interesting that they choose Frankfurt and not elsewhere in Europe as base to move these assets, Tom.
Yeah, Goldman's moving.
Look at you leaders.
Yeah, Goldman's moving David Solomon's wine collection. That's what they're doing. We've got an ECB meeting at 8:30 today. We'll have full coverage of this. John Farrow fired up. I first saw a young Farrow. He was like 15 years old. He was out front of the ECB building, being earnest because he knew every single statistic of Jean-Claude Trichet's life. We'll have Madame Lagarde, a news conference. Look for that at 8:30 New York time. Stay with us. Futures up 3. This is Bloomberg.
concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Airbnb's initial public offering is adding to a record year. The home rental business priced its long-awaited IPO above marketed range to raise about $3.5 billion. Now, that gives Airbnb a market value of about $47 billion. Well, shares begin trading today. Joining us with some great insight, Mandeep Singh, Bloomberg Intelligence Senior Analyst. Mandeep, I know Tom wants to talk about financials and how, valuations and things like that. But my initial thought is, isn't this company going to get massively regulated, especially if you look what's happening with Facebook? If regulators are going to go after it, what is this valuation?
Well, in case of Facebook, they have a monopoly. I don't think Airbnb has a monopoly in online travel. You have Expedia, you have Booking.com that are still bigger than Airbnb. I do think regulators in different cities are going to treat Airbnb differently, so they will have to deal with this, and that's part of how they have evolved over time. But yeah, that's just the reality for them.
I look, Mandeep, at this as a manufactured scarcity. You go right to the Bloomberg. Uber's got 80% plus equity, and these guys are pretending. They got a massive preferred equity tranche. The equity that they're giving out is 25%, 33%, whatever the number is. Is this a manufactured price lift?
Well, so obviously with an IPO, you want to generate some excitement and you want, long-term shareholders to get into your stock. And in case of Airbnb, they want to sell the story that, look, you're in a market that has got a long runway. We are the category leaders in alternative accommodations. And that's what they're trying to do, is to generate excitement around their growth prospects.
But when are people going to start traveling again, Mandeep, to go on holiday?
Well, so that's a positive thing for Airbnb is whatever domestic travel has taken place this year has been, through short-term rentals, vacation rentals, Airbnbs. Really, people haven't used much of hotels. The corporate travel has taken a hit. So Airbnb has been a category that people have used for whatever travel they've done this year. And so habits change. We think the pandemic has actually changed certain habits of consumers, and we're not going back to the old way. And I think that's going to benefit Airbnb.
Mandeep, you're razor sharp on this. I want to rip up the script here. Jim Cramer sums it up nicely over at the Death Star today on Tesla. Ryan Brinkman at JP Morgan has staked his career on saying don't own Tesla. He's got a stunning target of $90. From where you sit, Mandeep, does securities analysis matter anymore? Or are we just making it up event to event?
Well, so in case of investors right now, they really look at the growth opportunities. They are looking at each of these markets and saying which has the longest runway. Where can the company keep growing double, triple digits? And the online penetration that you're seeing across the different sectors, that is the big driver of growth. In case of online food delivery, that's got a massive runway, and suddenly it's becoming an essential service. Not so much with travel. This travel is still discretionary. But the fact is everyone is booking travel online. And they are looking at all these alternative accommodations, which, they didn't look at before. It was all about hotels. So habits are changing, and I think the shift to online is a secular driver for the long term.
Thank you so much, Mandeep Singh, their Bloomberg Intelligence senior analyst, joining us this morning. Now, coming up on Bloomberg Markets, Brian Chesky, the Airbnb chief executive and co-founder. 10 a.m. in New York, that interview 3 p.m. in London, and this is Bloomberg.
It goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonises it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Valuations, particularly, sort of the technology landscape, got to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg Bloomberg Surveillance. Good morning, everyone, from London, from New York. Thank you so much for being with us. We're monitoring European meetings, and we're going to monitor ECB here in a bit, the key item of the day. The key item from your reading into the holiday season has been delivered on a silver platter. And that is from Gideon Rose and Foreign Affairs magazine. All of you know I'm a giant fan of this magazine informing your thinking forward, whether you disagree or agree with Samantha Power, Jason Furman, Shannon O'Neill with a beautiful essay on industrial power. Can America recover? We're thrilled that Mr. Rose could join us today, the Peterson Chair, and with Foreign Affairs magazine. Gideon, can America recover? What's your optimism on the Biden administration putting it together?
Well, it's thank you, Tom, as always, for the kind words. On that central topic, it remains an open question. By having ended the Trump administration and moved on to the Biden administration, the United States and the world has avoided one path that seemed pretty clear to lead to a very stark and confrontational world at home and abroad. But it's not clear what the new path will be, because it's not just a return to the old one, because the world has changed in several years. The American political scene has changed. And even if the Biden team of experienced old technocratic hands from previous administrations would want to put the old playbook into effect, they couldn't, because nobody else around abroad or home do that. So the question is, can these smart, serious, well-intentioned people, the new administration's appointments are very professionally respectable across the board, pretty much. And what the question is, can these people with good faith, character, and competence put together Humpty Dumpty again, domestically and internationally? And we'll just have to see.
Let me start with Jason Furman, his wonderful essay on a better economy. Gideon Rose, we're in a morning here where the president has asked the senator from Texas, Ted Cruz, to represent him to the Supreme Court as he continues to battle this election. As America recovers in year 2021 and 22, is it a two-party system, or are we a political system unique and different? Are we vaulting ourselves back to 1840?
It's a great question. Nobody knows. We'll try to see. We'll only know the answer once Donald Trump has been fundamentally deplatformed and gone out of the White House, because only then will his power over the government and much of the public attention end, and only then will we see how much power he retains within the Republican Party. He clearly has lots of residual power in the base, but what he chooses to do with that power and how much there is, whether it's just money or whether it's interference in politics or whatever, we don't know. But I think that the Biden administration will get a chance to actually go and do public policy the way it's supposed to, go back to government doing what it was originally intended to do. But they'll be dogged by partisan opposition, which isn't going to go away, just like the Obama years were. So it's going to be a long, stagnant, slow muddle, not just economically, but politically and socially. At least it's better than the alternative.
Gideon, we're just getting pictures of Angela Merkel, of course, arriving on the red carpet over there at the Justus Lupus building. I think she's about 5-6 meters away from where reporters are. We'll see if she gives any statement going in. There's also Angela Merkel leaving next year, which I want to get back to later. But if you look at what Joe Biden's main concern is, and I do think Angela Merkel's just talking. I don't know whether she'll speak in German or English. Maybe we can listen in to see whether we can bring you news on that. But Gideon, if you look at the Biden administration, and if you look at what Trump will do next, is he the best chance for the Republicans in 2024? Because if so, he'll still have the power on that party.
I think you have to wait until 2020 is over before you can start talking about 2024, frankly. With regard to Merkel and the transatlantic alliance, which is absolutely crucial to the future of world politics, I think that what you're going to see basically is an attempt. The United States has essentially cheated on its allies during the Trump years. We've attended to our own concerns, abandoned our relationships with our most trusted long-term partners, and now are going to come penitently back saying, please, for the kids, global peace and prosperity. Let's reform the relationship. But and everybody will want to make the relationship work. The question is, will the behavior be repeated, first of all? And second of all, will others forgive us yet? And I don't think the answer to that is very easily.
Gideon, we're so thrilled you're here. I don't mean to interrupt, Gideon, but we now have the gentleman from France and Mrs. Merkel at the same time within the lobby in Brussels. All of the criticism and analysis in Gideon Rose is Mr. Macron essentially doing a de Gaulle imitation. Maybe he's Charles de Macron. Who knows here? Can Mr. Macron in the modern France recapitulate the misty memories of Charles de Gaulle?
I don't see him as de Gaulle. I see him more as Patroclus from the Iliad. The United States was leading the global team and the alliance and the West in all sorts of good ways, and we abdicated and went and sulked in our tent. Achilles walked off the field of battle. And Macron has tried to step up in these years and lead the West and take a pioneering role in many issues when Britain and the United States have gone off into la-la land. And I think that, you know, it's not a bad thing. And I welcome Macron as a democratic leader of a strong major power trying to make a constructive role in the world for himself and the broader team. I hope the United States, with a new administration, can partner with allies like Macron in the like-minded task of repairing the world.
Interesting, Gideon, to see, of course, two world leaders in Europe briefing in their own language. Emmanuel Macron, they're speaking in French, Angela Merkel speaking in Germany, and they're just a couple of hundred steps away from each other, I think, each speaking to their national broadcaster. What will Europe look like without Angela Merkel next year, Gideon?
That is a really interesting question as well, because she has not only been an extraordinary leader of Germany, one of the greatest in the country's history, but also obviously a pillar of European and global politics. And we can only hope, as I'm saying in the military, the graveyards are filled with indispensable men. I remember when Helmut Kohl stepped down, we all wondered, he's been so important and done so well and held things together, what's going to happen next? Merkel surprised everybody by just how well she did, how long she did it, and what an incredible calming and constructive force she's been, concluding with one of the great success stories of her tenure, which was the response to the pandemic, when so many other powers failed so miserably. But I hope that just as there was a renewal of German leadership after Kohl, so there will eventually be a renewal of German leadership after Merkel as well.
Gideon, what will or how will the Biden administration work with Europe, and how will President, Joe Biden in January, how much will he be distracted by the tax affairs of his son?
Oh, I don't think he'll be particularly burdened by the Hunter Biden scandal, which was a cooked up thing for political reasons, and will go when at least in serious ways once the election is done. But the question of Europe will last. And there, as I said, I think the issue is that the United States will be penitent and say, come back, we want to work with you guys. And the Europeans will say, great, we want to work with you too. And the initial honeymoon will be very nice. And then the practical realities of what others want the United States to actually do and what the United States wants others to do will come to the fore. And at that point, there's going to be a crunch. So the initial honeymoon, an era of good feelings, will be followed sometime during the first half of 2021 with a realization that there are a lot of deep structural problems that everybody has to work on. And the alliance is going to need years of therapy, of couples therapy, and patient work to repair the bonds and relationships that have broken and frayed over the last few years.
Gideon Rose, thank you so much. And we'll continue with Foreign Affairs Magazine and the Peterson chair. Just a superb issue. We'll come back on the American story as well. With our first word news in New York City, here's Karina Mitchell.
Tom, if lawsuits filed by the FTC and a coalition of states succeed, Facebook will have to break up. The suits say the social network's acquisitions of WhatsApp and Instagram were part of a campaign to illegally crush competition. They call for both of those deals to be unwinded. Facebook calls the complaints revisionist honest history. And both Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi are hopeful there'll be a deal on a new stimulus package. Lawmakers working on a compromise plan face two roadblocks. One is a business liability shield. The other is aid to states. Pelosi said, quote, one way or the other, we'll get it done. And for the first time, daily coronavirus deaths in the U.S. have topped 3,000. Americans are being infected with the disease at an increasing rate in the final weeks of the year. The CDC predicts that by Christmas, more than 300,000 people in the U.S. will have died. And how many vaccines will be needed to immunize the population in the U.S.? For the latest edition of Wall Street Week, David Weston as the Dean of the Harris School of Public Policy.
One is unlikely to be enough, given how long it takes to manufacture and how many millions and millions of people need to be vaccinated. But of course, the more different vaccines are introduced, the more complex the distribution is, because they may have different dosing requirements, different storage requirements, different distribution systems. So ideally, we get as many doses of each vaccine as we can to minimize complexity and maximize distribution.
And you can catch the full interview Friday night on Wall Street Week. That's at 6 p.m. New York time on Bloomberg TV. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than